Good morning, everybody. Welcome back to another episode of The Market Open. It is Friday, September 27th, 8:22 a.m. We are 25 minutes early because in the next 2 minutes or 8 minutes, we get PCE, which is going to be very important. Why is PCE going to be very important? Well, that is going to let the Fed know if they are actually making progress on this thing called inflation. And if they're not making progress on this thing called inflation, we're going to see the market have a little bit more of an impact. If they are, then the market's going to feel base. I don't think we pump on this news. I think the market's going to just basically be like, hey, like, good. We're doing what we need to do when it comes to inflation. So it's one of those things where I think it's less of a pump, especially because it's a Friday. We're probably going to see options expiring today. We're going to see people just telling and taking profits in general. But if it's a good report, you see Bitcoin right here overnight has been absolutely incredible, 65,418. We can hopefully maintain some of the momentum that we've had over the past couple of weeks, given that the Fed will see that it's obvious that it's good to cut by 50 bips, and they're probably going to have to keep cutting if inflation is starting to be dealt with. The consensus expectation for inflation is 0.2 on the PCE. On the monthly and on the yearly, I think the consensus is 2.5. So if we can beat 0.2 and 2.5, we're going to have, I think, a good or a decent reaction by the broader market. Yeah, so core PCE, it's 2.7. We have to be 2.7. So core PCE price index year over year, we have to be 2.7. And then the actual PCE, no, I was right. Look, I was looking the wrong way. We need to be 0.1. So price index month over one, the street's expecting 0.1. Last time we had 0.2. We're forecasting 0.2. If we can beat 0.1, that would be really exciting. And then 2.3 is the consensus on the year-over-year price index. Last time it was 2.5. If we beat 2.3, we're going to be in a good situation. So 0.1 and 2.3, and in about 6 minutes, we will see what happens. Thank you, everybody, for being here. Good morning to everybody. It's officially Friday, dude. This week is, I don't know, this week was kind of a slower week, in my opinion. This was not one of those fast weeks, but we're already here on Friday. Katie, Sanjay, Blake Anderson, Troy, Ricardo, GE, what's up? Gene, Rippy. I mean, if we get a good PCE, yeah, I think we'll have some fun. The thing is, it's hard to say Rippy when we're almost in extreme greed. We talked about that yesterday. And I mean, like, in general, I feel like not things are getting frothy, but, well, yeah, some things are getting frothy. But in general, we've done so well, and we're going into that election cycle. Maybe we take a little bit of a break. Maybe we trade sideways over the next month, and then we go back to normal. Or maybe this market doesn't care. You know, maybe this market says, hey, we are ready to actually go higher. Farino, Friday, shout out to Rebecca Black, dude. Do you guys remember Rebecca Black? She's the GOAT. I like Rebecca Black. I remember when that song came out. My generation definitely went crazy over that song. Amit, did you get some sleep? Honestly, no, dude. I was supposed to sleep. I barely slept yesterday. I was supposed to sleep last night, but I slept at like 2 a.m. again. So did not get, I think I'll get my sleep on Saturday. Saturday, I'll be sleeping in because I'm definitely not sleeping now for the rest of the day. So Saturday will be a good day to get some sleep. Deacon, what's up? Good morning. Baskar, Stewart, I'm Beneficial, Jeremiah, Bay Ray, Sundown Sam. What's up? Brent. Tom says Amit looks tired today. I think this is like a full week of just exhaustion, and you're finally ready to knock out. Dude, the Elon post, it got 35 million views, bro. Like, I was still responding to a bunch of comments under it last night. So holy crap, dude, they community noted Elon. Whoa, I just saw this morning. Look at this. Well, we'll have PC in 4 minutes, guys. They community noted Elon. Elon says you can't convert a nonprofit into a for-profit. That is illegal. Damn, he got community noted. That's crazy. That's funny, though. U.S. law allows nonprofits to be converted into profits. Okay, I guess, like, yeah, technically it's right. You can convert a nonprofit into a for-profit. But Elon's broader argument is you can't convince me to put $40 million to invest, quote unquote, or to donate into a nonprofit, and then I have zero equity stake when you turn it into a for-profit. At least that's what I got from it. He's been community noted before. Yeah, he has been community noted before. But yeah, this thing went 36 million views. That was a lot, dude. That was a lot. My mom last night. You guys remember I told you the story of my mom finding out and me not wanting to tell my mom in the morning because A, I was really sleepy, and B, I would have to explain like why Elon quote tweeted me, and she doesn't know about Sam Altman. She doesn't care. So last night she came home from work, and she was like, yeah, I saw the tweet, and she was like, she's like, I started sending it to people in India. So I started sending it to all my cousins, and everyone was like, oh, look, Elon Musk knows my boy. I'm like, Mom, do you know why he quotes? He was like, yeah, you said something about this Sam person. I don't really care, but like Elon quotes it. I was just like, of course. I was like, my mom didn't give a shit, dude. My mom was like, who's Sam Altman? She has no idea. But she was just happy that Elon posted it. So that shout out to Elon, bro. Elon is Elon. That an Elon quote, I guess, can go really, really, really viral. But 2 minutes left until PCE. We'll see what happens now. And we'll hopefully get more information on this Sam Altman thing, because I've been trying to follow the story as well. I've gotten no details. I've gotten there is one detail that came out last night. Sam Altman wrote to his employees at OpenAI that he's not going to receive a really big equity stake. I think the quote was like, he will not. He sent some email to them. And he said, I will not be receiving a very big equity stake. So if 7% is not very big to him, then maybe that's the case. But it is official that he's getting an equity stake. That is confirmed. He confirmed last night he is getting an equity stake. The question is going to be, how much is it going to be? That is the most Indian mom response to, yeah, dude, she did not care. She was just happy. She was like, so we know Elon Musk now, right? I was like, Mom, he doesn't know me. Like, it just, it happened to pop. She's like, no, he knows you now. I'm like, no, that's not how this works, Mom. That's not exactly how this all plays out. All right, we have a minute until PCE. Today's Friday, September 27th. So it should be coming out. Here we go. All right, folks, let's load it up. We are looking to beat 0.1 on the monthly and 2.3 on the yearly. 0.1 on the monthly and 2.3 on the yearly. That's what we're looking to do. If we beat that, we will see how the broader market reacts. And if we have a nice beat, then markets might have a chance to go a little bit higher. Again, markets have done really good this week already. All right, we got some. We didn't get the two ones that we need to. There we go. Monthly comes in at 0.1. That's in line with expectations. 2.2 on the yearly. That's below 2.3. Monthly is 0.1 versus 0.1. That was what we expected right there. Yearly, 2.2 versus 2.3. That is, the forecast was 2.4. That's actually even a better beat. Oh, wow. The forecast was 0.2. Huh. So, I mean, even if the forecast was 0.1, which was a consensus, that wasn't exactly the forecast, we came in line with expectations. If not, we beat it by 0.1. 2.2 on the yearly. That means we beat it from 2.4 and 2.3. Previous was 2.5, so there's a 0.3 difference right there, month over month, on PCE over the yearly. So let's look at the market. Bitcoin likes that. There's your green candle right there. Look at that. Bitcoin up about 1/3% right there. Nvidia down, doesn't really care. Google up about 0.5%. S&P kind of cares, kind of doesn't. Not really. It's like a little bit not. Again, we had a really good week, so the numbers would have to be insane for the market to really love this, but we're going up a little bit right there. Tesla up about 1%. Palantir down a little bit. Robinhood got upgraded today by Citibank. We'll talk about that in a second. Robinhood 22.55. They're not moving too much. Micron not moving. Alibaba up another 1% in the pre-market. That's more China. Rocket Lab up 1.23. SoFi up 0.5%. The airlines are up another 1%. But the overall market, not really moving. It's good numbers, but it's not horrible. I mean, it's not like, it's actually it's amazing numbers, actually. It's like, it's a beat at this point of the year, given how hard it's becoming to beat, is very good. But again, the market is, the market's done well. So it's going to take insane numbers for this to have that big of an impact, especially when we knew inflation's coming down.
Since we're up 0.1%. The problem is up 0.1 is the lightest since April when it was unchanged. Now we get into the Moneyball numbers. The PCE price index, now this is a month over month, expected to be up 0.1. It is up 0.1. If we look at PCE year over year, expecting 2.3, it comes in light, 2.2. In the rearview mirror was 2.5. 2.2 or 2.5. They all comp to the same point in previous history, and that is, of course, when it was 1.9 in February of 21. So the last several months, that's the comp. We are making progress. It's still not at 2%, but it's certainly getting closer. But do remember, these are the lowest metrics for inflation. Maybe that's why they're the Fed favorite. Now, if we look at the core PCE month over month, comes in a tenth lighter than expectations, up 0.1%. That equals where we were in May. And if you want to find a lower number, it's all about rounding here, folks. You go to November last year, it was up 0.09. Technically, that rounds out. If you go to November of 20, it was 0.08. To find something that doesn't necessarily round up to that number, you're going back to April of 2020 when it was minus 0.33. These numbers, of course, do get rounded up or down, so it makes it a little more difficult to do the comps. Finally, on number 7, on the core PCE, year over year, expected up 2.7. This one is 1/10 hotter than the rearview mirror, which was 2.6. As a matter of fact, if you look at the last several months, this is going the wrong way. If you look at where we were in June, 2.57. I told you there's rounding issues here. 2.62 was our last look, and now, of course, it's 2.7. So these numbers, maybe core PCE to some might be the most important. Now, very quickly, we'll go through some other numbers on the advanced trade balance for August, and I like to.
All right, so these numbers are good. I mean, the Fed really cares about the monthly and the yearly, and it seems like that's okay. Let's get a little bit of analysis on it, but I'm looking at it even deeper on my other screen as well. I think these are not bad numbers. It's just the market. It's up a lot this week, so there's not that huge of a reaction.
Right now, with more reaction to this, Steve, what's your takeaway?
You know, there's going to be a time to declare victory on inflation, and this is darn close. Obviously, everybody wants to be a little wary, the idea that it could come back, but I'm calculating here, Becky, on the fly, so warning about that, some 3-month annualized rates, and we're now on the core 1.74. We've been below 2 for the last 2 months now. I didn't factor in a revision for July. I don't think there is one. 1.7 on the headline 3-month annualized, and the you're down at 2.3 on the core 6-month annualized. So these are good numbers. This is what the Fed wants to see. This goes along the lines of what the Fed expected, even a little bit better. With inflation under control, I have been a little bit more focused on the other side, and it's the consumer spending numbers that I think you want to sort of take a look at, maybe a wary look at. That 0.1 on consumption. Just be a little careful with that, because we're going to have a good quarter. We're going to have a good quarter because the beginning of the quarter was good. The end of the last quarter was good. Raises the level. That's the way the GDP math is. But the idea that we had this weakness or really lax growth in the month of August is something worth watching here, whether or not the consumer is giving it up. We did have a big revision yesterday, guys, in the savings rate. They raised it from 3.3% to 5.2%, which means the consumer is in somewhat better shape than we originally.
Now, again, you have to believe that the personal savings rate is at 5.2 versus 3.2. I don't know necessarily if I believe that. I don't know how they raised it, how they revised it, but if you believe it, then that means that consumers technically have more money than what we thought they had.
Originally thought in terms of their savings. But you want to just watch the income numbers here, watch the consumption numbers, and see if we're going to have a weaker quarter in the fourth quarter, which is what many people expect. So it's been forecast time and again. It's been wrong. But the idea that you had a weak consumer in August is something worth watching, Becky.
Steve.
Hey, man, it's not bad. It's not bad at all. We came in with some pretty decent numbers right here. There's a couple of metrics where it's a little bit of a miss on retail inventories ex auto, but besides that, dude, I mean, the core thing we needed to see was a decrease in the monthly and the yearly, and there it is. I mean, we are getting awfully close to the Fed's target, and I think that agrees again another 50 bips. Yeah, it's a little bit of a yawn. It's not that exciting. It's not like March where like we needed that number to go down and we were all waiting for that number. Now it's kind of like, all right, I mean, that's the thing about some of the macro data. For the past 18 months, the macro data was super important because it was like this fight against inflation, and like good news would be bad news, good news. It's like all this conundrums of explaining the data in a way that makes sense to get rid of inflation. Now, as inflation comes down, the question is, how is the housing market, or not the housing, the labor market, along with the housing market, going to do? And the labor market is not necessarily deteriorating. It's definitely declining, which is why we're doing these 50 bips, but it's not, that's going down to such an extent. Now, we'll see the new jobs numbers next month, and hopefully those are close to 120 to 140,000. Market's up a little bit on this, 22 bips, but a number like this is not going to make the markets explode, simply because we kind of expected it, right? We knew inflation is coming down. It's just, the fact that we are trading at multiples that are very, strong for the broader market, holding those multiples in the face of all the volatility we're going to see up until the election, I think is more important. And then the election after that, and after Q3 earnings, I think we can likely expand. Bitcoin right here doing great. Bitcoin doing absolutely phenomenal. Let me check the inflows yesterday on Bitcoin. So yesterday, inflows for BlackRock. Wow, talk about it. So overall, $365 million went into Bitcoin ETFs. 93 went to BlackRock, 74 went to Fidelity, 50 went to Bitwise, 113 went into ARK. And then the other ones got like 6, 7, 8, 20 million across the board. So that's a big day. That's one of the largest days. The past 3 days in a row, 136 million on September 24th, 106 million on September 25th, and then 365 million here on September 26th. The 3 days before that, you have 4.5 million, 9.2 million, and then on the 19th, 158 million. So a lot of decent inflows on Bitcoin, and we haven't seen this level of hundreds of millions, as you can see right here, happening in a while. I mean, in August, it was just dumping and dumping and dumping almost every single day. So the ETFs are coming in. China opened the money printer. Let's check oil prices right now. Oil prices. So they're down again. They're down again, down 0.15%. The Saudis that are printing is great, and not printing, but pumping and drilling. They're doing both, is great for oil prices coming down. Not good for oil stocks, but that's okay, because for the broader economy, the price of oil going down is fantastic. It's great for inflation. I mean, this right here can probably really upset a lot of the inflation estimates to the downside if you thought it was going to the upside over the next few months, especially if it stays at this level. So that's great. Great for airlines. That's why airlines caught a bid. And then great for the global economy, because input costs get lower. And then on top of that, we have China that's not letting up. So really, this week has been a story about China and the Saudis basically fixing up some of the mistakes they've been making in the past. China right here has been unproductive in terms of its stock market for the past 6 years. I mean, we have not seen that much momentum at all. Obviously, we had 2019, then the pandemic, and then, China really didn't take any stimulative efforts. Now they've changed. They've changed dramatically. So you got FXI right here that was up 8% yesterday. Alibaba still up a little bit right here. In the pre-markets, up 1.37%. David Tepper, who came on CNBC yesterday and said, hey, buy China and buy it aggressively. We're at least starting to see the rest of the world perk up, and that's important ultimately for the United States as well. Are you investing in China? No, I'm not investing in China. I mean, if I was going to invest in China, I don't know. I feel like if I was going to invest, I would pick one company. I don't know if I would invest in the basket of companies. And that one company I would try to have some conviction in, but I don't have too much conviction in China. And so it's not that interesting of a play for me. I do think, though, I mean, if they're going to keep turning on the money printer, then I don't think it's a horrible idea to go long. I personally am not going to do it. I also think there's one day where you might not be able to trust them and something happens. But if they are fundamentally changing the paradigm of their their economy, and they actually want people to buy back shares, and they're not going to chop your head off if you make a mistake as a company, maybe we're in a whole different era for China. But I'm personally not in China. Psych Pilot, thank you for the 10 gifted memberships. Appreciate it, brother. Thank you for the 10 gifted memberships. So I'm assuming a bunch of you just got to be members on the house from Psych Pilot. Yep. Jackson got a membership. John got a membership. David, the numbers. Jake, Chris, Mario, Chan, Daniel, Jonathan. You all got numbers, or you all got memberships. Thank you, Holland. Appreciate that, brother. Appreciate it. Admit their economy is crap, and we all know this. Yeah, so it's not about their economy being crap. We all know their economy is crap in China. The question is, are they ready to fix it? And even if they don't fully fix it, even if these are temporary bandages, that doesn't mean there's not money to be made. on the perception of how they're trying to fix it, right? And so that's where I think there's a bull case. I still think it requires a lot of trust, and if you don't have that trust like I do, then I kind of wouldn't engage with it. But if you're ready after a couple of days of stimulus to be like, all right, China's the play, then there's money to be made here. I don't know if it's necessarily the long-term bet against all the American companies that are still, Google's undervalued. We know Google's undervalued, right? There's risks to Google right now, but we know it's undervalued. So I'd rather invest in Google than any of the Chinese companies. Okay, so a couple things. Let's get into some other topics. If you're just joining, PCE was good. It was not bad. And we beat on the monthly and on the yearly. Now let's do the Robinhood upgrade real quick, and then we'll talk about Palantir. So Citibank, which has been one of the largest, not bears on Robinhood, but they've been like not nice. Like every analyst this year has been pretty nice to us. There's only a couple that are like just like annoyingly not getting the thesis, in my opinion, and they like have these artificially low price targets, and it's like, dude, like you can't deny some of this. And we're seeing with the upgrades over the past couple of weeks, they're starting to realize we can't deny it. So Citi on Robinhood, they raised their price target to 23 from 19, but they still are neutral. We raised our price target on Robinhood to 23 from 19 as a part of a Q3 preview for brokers and asset managers. The outlook across the broker space has been tilting negative, driven by lower rate expectations for mostly asset-sensitive plays and lingering concerns about sweep deposit pricing. Basically, rates come down, and the brokerages have less net interest income. We cut earnings estimates by an average of 6% and 7% for the brokers in 2025 and 2026, respectively, excluding Robinhood, which saw positive revisions. So they're saying, hey, we put the Schwabs of the world down by 7%, but Robinhood, we actually think they're going to have earnings growth, even if interest rates come down, because there's something unique to their organic growth. We see downside risk to consensus estimates for most names, with the greatest risk at Charles Schwab. We continue to like LPL Financial. We increased estimates for Robinhood, citing strong net deposit trends and trading activity in recent periods, while we are becoming incrementally more constructive on the name due to improving fundamentals, meaning they're starting to warm up to the overall thesis on the company. We also see near-term risk for potential lower trading activity and have longer-term questions around the sustainability of their organic growth. I think that last sentence is fair. I think there are definitely near-term risks for potential lower trading activity. For example, if we head into a recession or if the next 3 months are flat, then yeah, Robinhood's not going to have a ton of trading, which is going to be hard for them to beat their numbers. And then B, in 2025, if the market is not on fire like it was on 2023 and 2024, are people going to be trading 160 million options a day? The only way to mitigate the lack of trading in a lack of trading volumes in a like bearish to flat market is by having so many users that people are going to be trading regardless, even if the sentiments aren't super bullish. And that's how you mitigate for the lack of sentiment being green, and the green usually creating all that momentum in trading. I don't think Robinhood has those many users, especially users that are like ready to short the market or buy puts every day. So if you don't have those types of users on the platform, and you have users, which retail tends to be people that jump in more when things are bullish, then you're going to have to grow external to that. And I think it's fair to be like, why would I sign up to Robinhood Gold if the market's tanking or the market's flat? Like what value do I get from, you kind of don't even want to look at your brokerage when that stuff happens, right? I think if 2025 ends up looking like that, because I don't think that's going to happen in 2024. I think 2024 is going to be really good for the broader market and for Robinhood. But let's say in 2025, we get a flat to negative year just on the broader stock market, which again, I don't know if that's going to be the case given all the AI growth we're seeing, but let's say that happens. I think that would be a phenomenal year to just buy the dip on Robinhood. Because I would imagine Robinhood would start, like, if it really becomes bad, it would go back into the teens because there just would be no growth, right? You would assume like everything kind of slows down aggressively. And that would be like buys for me for the next 10 years on those shares, because I believe one day they're the next Charles Schwab. So like I would just get it really cheap in a down year. I feel like in a down year, that'll be like 2022 to an extent on certain companies that are so sensitive to the rate environment or to the trading environment, like Coinbase was when crypto had its crypto winter and it traded 30 bucks. Like we had a crypto winter, Coinbase went to 30, and then it hit 250 at one point. Now it's at 170, but still incredible return. So if you were bullish on crypto for the long term, those were amazing prices to get it at. But the problem is everyone said crypto was dead when Coinbase went to 30 and Bitcoin went to 16,000, including myself. And that was stupid, because if I changed my tone on that, I would have picked up some Coinbase stock and been up. So if that happens, I think that's bullish, but I don't think that's going to happen in 2024. I think it would happen like mid 2025 if that happens. The other aspect to it is Robinhood, if they just have so much organic growth on like gold and the web trader app and all these different features that they build out, it might not matter at the end of the day. Even if it's a flat market. Brad says, I transferred what I had in E-Trade into my Robinhood. Yeah, I got this message from a lot of people over the past couple of weeks. And it seems like a lot more people are doing that. Sense27, thank you for the $4.99 super chat. Thank you for doing what you do. I look forward to your videos every day. I appreciate you, brother. Thank you for joining the channel, and thank you for being here every single morning as well. Okay, Psych Pilot, thank you for the COP 10,000. We've been getting a lot new. What is COP? COP currency. Colombian peso. All right. So thank you for the 10,000 Colombian pesos. We've been getting a bunch of new ones this week from a lot of different people. He says, Amit, tell them I'm killing it on swings. Well, shout out to Psych Pilot. Looks like he's killing it on some decent swing trades that he's doing. Look, this environment is not horrible for swings. It's not horrible for swings. I think Psych has successfully swung SoFi, if I'm not wrong. I think that was the stock. And I think Wendy's also is one of the ones he's been swinging. He said in the chat a couple weeks ago. So look, I mean, certain stocks have been nice for swinging. But now we're going to have to see over the next 5 weeks going into the election if the market fully decides to go up or down together. Bitcoin trying to make a run to 66. We did hit 66 over the weekend, or not over the weekend. We're not at the weekend yet. Over the night, we hit it right there at 5 a.m. I woke up to that notification. And now we're kind of closing in at 65,859. So overall thesis on Robinhood, I think the rest of the year is going to be good. I think, it'll exceed some of the price targets. It'll probably get to some of the higher ranges. I believe at least 25 is kind of my price target. Next year, if the market is flat and Robinhood tanks, I think those are great prices for the long term because overall it will be innovative and growing for the long term. But even if the market's flat or bad, if Robinhood has so many users and offering so many other additional products, then it doesn't have to tank because they will still be able to show growth, even if it's not always through the massive forms of transactional revenue based on a bull market. Tesla up 1.4% of the pre-markets. Google up 0.4%. Costco's down a little bit. We'll talk about Costco earnings. They actually had a really good earnings, so we'll talk about that in just a second. Accenture's up a little bit. Micron's up a little bit. HubSpot's up a little bit. Rocket Lab, wow, 2.3% of the pre-markets. 890 on Rocket Lab. Look at that. 890 on Rocket Lab as well. Not bad. Psych Pilot says, I have a stable now of swings. Average 6,000 per month in Colombia is awesome. I love it. That's incredible. Yeah, if you're making $6,000 a month on swings in Colombia, given the cost of living in Colombia, that is also not a horrible way to get more purchasing power on that money. Suraj, thank you for the $20 super chat. I really appreciate you guys sending the super chats. You guys do not have to do that. Amit, keep killing it with the content. Shout out to MicroStrategy. Thank you, Suraj. I appreciate that. I appreciate it. Thank you so much. MicroStrategy, I think, would be up 2% in the pre-markets. MicroStrategy is up 3.3. Wow, 171. Oh my. That's a lot on MicroStrategy. That is a lot on it was 165 yesterday, 171 today. If MicroStrategy breaks 200, all hell is breaking loose. I mean, the amount of bulls that are getting excited about MicroStrategy. That is gonna be a fun one. Okay, Palantir. Let's talk about Palantir. So we did get some more insider selling, folks, yesterday. Peter Thiel sold another 4.5 million shares of Palantir yesterday. So this is what we got: 4.5 million, 169 million. Which means Peter Thiel has basically sold $597 million, call it $600 million of stock in the past couple of days. Now, again, I'm not going to go through my entire thesis on insider selling. We've talked about that many times. I kind of don't think it's a big deal. But the thing I do care about is how does the stock market react to all of this money or all these shares being sold? He had to have sold that months ago. Nope, he actually sold 19 million shares 6 months ago. Over the past couple of days, he has sold 15 million shares, about 15 to 16 million shares. These are sales that happened literally yesterday. My take on all of this is that the stock market really is not caring that Peter's selling. I mean, we're still holding high 30s, basically at 52-week highs. We haven't been able to sustainably break over 38. But the insider selling has not been like this massive wall that we've not been able to get over because there's people willing to buy Peter shares. Obviously, if he's selling it, someone's willing to buy it. So Karp has sold 9 million shares. Thiel has sold 15 million shares, collectively both selling about 24 million shares of their stake. That is telling me they believe that this is a good time to sell. I mean, make no mistake about it. They are saying, hey, this is like a good price. Again, if you have like 5,000 shares compared to their 100 million shares, it's a different kind of thought process in terms of risk mitigation. But the fact that the market is not really tanking Palantir, or the fact that people aren't upset about all this insider selling and they're dumping their stock with it, it goes to show major institutions and retail investors have picked up a lot of these shares, and they kind of don't care that they have to pick them up in the high 30s. And it is what it is. And that's why you're getting a lot of this momentum, at least on Palantir stock, even with all of the insider selling as well. His average was like 37.11 as well. So he's getting like these high levels on sales. I'm so curious how brokerages sell an insider stake. Like, do they have this complex algorithm? Because they always get the best price. Like, usually they always get the best price of that day. And I feel like it's some complicated algorithm that they have together where they can get you the best price at the best time. But yeah, the market doesn't care. Market seriously does not care. And so it's kind of nice to see that, you know, back in 2023, if an insider sold, the market would get super upset when it comes to Palantir. Now there's just so much momentum. Market's ready to move on and not care too much. Amit, did you tell everyone your boy Dougie got some ass last night? All right, everyone. Dougie got some ass last night. We're talking about the smart summon, not the stuff that you guys probably thought about. If I don't know, maybe Dougie got that as well. Maybe. Yeah, you got to let us know how it goes, Doug. You got to let us know after you use it. How does it go? We got 1010 coming up. Elon's pumping it on Twitter. He's excited. Here's the fear and greed index at 72. He thinks it's going to be an event for the ages. Also, speaking of Tesla, dude, someone bought some bullish call options on Tesla. Someone bought $3 million of 470 leaps. On 470 leaps. There you go. Amit, I read that he got $27.50 for the shares reported yesterday. Is that wrong? Yeah, I think that's wrong, Psych Pilot. I'll do double check on that, but I'm pretty sure that's wrong. He sold yesterday like on the open market. It wasn't like a pre-planned scheduled sale that he had. But look at this. So Tesla, $3 million on 470 leaps, December 2026. That is a pretty aggressive strike price that you're picking. And you're buying 3 million of them. Obviously, it doesn't need to go to 470 for this call to be worth more money and to sell it back to the market. But someone's estimating, I would imagine, a big move on this 1010 event. And that might print heavily if Tesla moves to like, you know, that 300 level that people are thinking it can get to. That contract's going to be worth a lot more. And you've got some time on it in terms of 2 years. But 2 years, 470, that would be over $1 trillion company at that point by the end of 2026. Which I think that's possible. I don't think that's crazy to say Tesla goes to a trillion. No, that would be more than a trillion. That would be 1.6 trillion. Yeah, because after the split, right now they're at 800 billion. That'd be just like 1.4, 1.5 trillion on Tesla. So they're expecting a pretty aggressive move right here. I think like 350 is when it goes to a trillion. And then 400-ish, 470 would be, closer to that 1.6, 1.7 trillion range. So people obviously are a little bit more excited for Tesla based on this 1010 event. And again, PCE, for those that are just joining, it came in lower than expected, which is very good. That's great for the stock market, great for something like Tesla, great for rate cuts. And that's why Bitcoin's getting some momentum right now. PayPal, look at that, $80.69. That's getting some love right here. SMCI still getting hit. SMCI down another 0.47%. They got probed by the DOJ yesterday. That news came out of nowhere. And this one tanked after tanking 2 weeks ago, down 30%. So SMCI really can't catch a break. But it is one of those names where if you jump in, I guess you've got to think that the lack of filing of the 10K and the DOJ probe is not that big of a deal. If not, then, you know, there might be a little bit more pain left on this one until they figure everything out. IWM up 1% in the pre-market. That makes sense because inflation data is good. Qs are up a little bit. Visa's up a little bit. Nike is up about 0.5%. Hims is up about 1%. Disney up 0.5%. Apple up a little bit as well, 227. I watched a couple of videos yesterday on Apple demand. There are various people saying that their experience at the Apple store is seeing that they think there is very little demand, very similar to what the analysts have been saying from Morgan Stanley on their equity notes. I don't know. I mean, at this point, we're going to have to see how this demand turns out to look like for Apple. But so far, I think people are a little bit worried about what the overall demand is going to be. They've had more than 3 strikes in just the last quarter. SMCI, no bueno. Yeah, dude, it's lowering guidance. Then the 10K report, and now this DOJ probe. Those are your 3 strikes, and that could be pretty bad. Okay, cool. Oh, shout out to Derek Wall. Derek, you did not have to do that, but thank you, Derek. Those are 50 gifted memberships. So a bunch of you in the chat. He says, good morning, degenerates. All right, a bunch of you just got a membership. Eric, Wong, Rick, Jason, Elizabeth, Yao, Pete, Angeli, Thomas, Jody, Chris Jacobson, Mahi, Nutella Sandwich, Jokespedia, Ariel, Brian, Sean, Jed, Nate. You guys all got a bunch of memberships to the channel. Thank you, Derek. Thank you for the blessing for the degenerates. Really appreciate it. Really appreciate it, sure, sir. Derek and I were talking last night about humanoid robotics and Figure, and like if Tesla's going to win against Optimus. And I saw another interview last night about humanoid robotics, dude. I feel like this shit's going to win. It's going to take some time. Tesla right here, 257, up 1% of the pre-market. It's going to take some time to get there. But if it gets there, I think the bots are going to be exciting. Now, the thing about the bots in China has a lot of bot companies as well. So we're going to need American companies like Tesla to win when it comes to bots, because I don't know who the hell is going to trust the Chinese robot in their factory. Like if you do, there's just like no way I feel like consumers could trust your products. So I think Tesla's going to have to be one of the winners. Figure hopefully is one of the winners. And we should see the bots continue to gain momentum. Thank you, Derek. I appreciate it. Psych Pilot, thank you for another one gifted membership. You guys do not have to do this, but thank you guys. Appreciate it. YouTube gives it out randomly to anybody. At first, I thought you had to like claim the membership, but apparently YouTube just like gives it to anybody. I didn't know YouTube just like gives it to people, but yeah, YouTube just gives it to random people. So thank you guys. Appreciate it a ton here in the chat. Daddy Derek. Yes, exactly. Appreciate it, Derek. Thank you, bro. Thank you. Thomas says, I could trust the Chinese bot in my factory for sure, but probably not in my homes. I don't know, dude. Even trusting it in your factory. Like, I feel like all that data could just be going back to the CCP. And like, I feel like companies would be paranoid is my thing. Especially if a company like Amazon, you know, like I feel like so many companies would be afraid of what potentially could happen if they had the bots in their factory. Okay, what else do we have going on? So I want to get a couple more updates on PCE. And so for those that are just joining, PCE came in way lower than expected, which was good. I mean, not way lower, but lower than expected, which was good. 573 right here on the S&P. So we're gaining some momentum right there. And so that's helping out. Let me see if I can pull up a couple different headlines I was looking at last night. Oh, Costco earnings. Let's look at that real quick. So Costco right now is down a little bit in the pre-markets, but it's not an aggressive down. So the thing about Costco to understand is that they grew top line sales 6.9%, excluding gas. Obviously, gas prices came down, so some of that revenue came down. But if you exclude gas, they're growing 7% year over year. Costco does have a decent sized gas business. And most importantly, e-commerce is up 18% and app downloads are up 30%. So the real area of growth we saw in Costco was on e-commerce. And the rest of the world is still 95% brick and mortar, 5% e-commerce online. That's why people say Amazon actually doesn't have a monopoly. They have a lot of competition and they're going to have a lot of momentum as the world transitions into e-commerce. But the margins on this stuff is not the best. I think Costco has like 6% margins, which actually aren't that horrible for the retail business, but it is growing on the e-commerce side. And that was something I think investors really liked. Costco is trading at a 55 times forward earnings. So it was absolutely priced for perfection. I think it would need to have one of the craziest quarters for it to pump. We didn't see that happen, which is okay. But the fact is that Costco is still gaining momentum and they're gaining market share and they're executing. So even though they're priced for perfection, it didn't really matter too much for the stock, just given, that they've done really well. And any numbers they could have put up probably would have been a little bit of a sell the news. But even with their earnings, down 5% is not too bad. Or not down 5%, down like less than 1% is not too bad either. Yeah, those are the numbers right there. Those are the numbers right there on PCE. Again, yearly 2.2 versus 2.3, and then on the monthly 0.1 versus 0.2. So monthly 0.1 versus 0.2, yearly 2.2 versus 2.3. It's good numbers, dude. It's good numbers, and those are the types of numbers you needed in a way to start accelerating the idea that another 50 bips is likely going to start to happen as well. Let's get some updates on the markets from some other analysts, see what they're saying, and then we will keep going from there. Oh, sorry. All right, here we go.
A lot to get through, Bruce, but we can't talk about the stuff unless we know what you think the curve is going and where the action's going to be.
So the curve is very important, but first on the Fed on that 50 basis point move, there's no question that they made that move, not because the economy is getting weaker. We saw 3.0 GDP today in the second quarter, and we're going to see 2.9% in the third quarter, according to GDP now by the Fed, which is Bostic and Atlanta Fed. So it's looking really, strong from the economy standpoint. Corporate earnings also very strong, and so we believe
they're cutting into strength.
We believe they're cutting into strength. Thank you for saying that, and that's going to help accelerate markets, and it's risk on across the board. And so, what does it mean for the yield curve? Well, I believe the yield curve, Fed funds eventually get to a 3% terminal rate, Fed funds, which puts 2-year notes around 3.25, down from 3.60 right now. But the big move is not 10-year notes, which probably settle in around 4%. So they have nowhere to go. They can go lower for a trade, but they have nowhere to go over the long run. The real trade is the 6.5 trillion sitting in money market accounts that's going to see its rate fall from 5.25 to 3%. And with that decline, there's going to be a lot of money that starts to deploy that's been on the sidelines earning these higher money market rates. And so it's risk on for credit and for markets.
Is that money?
So far, that actually isn't happening. Money market funds, we saw this last night, and I'm still trying to figure out exactly why this was the case, but money market funds actually increased by 120 billion last week. My guess right here, so this is my guess, and I'm open to any theories people have in the chat. My guess is that money market funds eventually will come out and go into the broader markets and crypto, right? Like that's going to happen, but it's not happening yet. And the reason it's not happening is because I think people are selling their losers and tax loss harvesting, and they're putting that money into a money market fund and waiting until after the election. So if you owned NVIDIA this year, and then you owned, I don't know, what's a stock that's underperformed? Let's say Celsius. You know, NVIDIA is doing well. You're probably not going to sell that. But Celsius is doing crappy. So you're like, you know what? Let me take the tax loss harvest on Celsius, take that money out. I don't want to buy NVIDIA right now at 125. I'm going to wait till after the election. I'm going to put that money in a money market fund, let it chill out for a bit. Then I'll bring it back after the election. And so maybe this 120 billion is from people taking profits on losers, putting a tax loss harvesting, putting it into the money market funds and waiting. That's the bullish way to interpret it. The bearish way to interpret it is people are calling a top on the market. And they're saying, hey, we need to take some profits because this is like really frothy. And we need to take that money and put it somewhere safe because it's not safe in the S&P 500 right now. It's just not safe in the broader market for the short term. Now, maybe that is a short-term move and that money comes back, or that is a legit move of people saying we will still take 4.5% or 4.75 rather than be in the markets, given the markets are so strong right now. It's one or the other, but that's why I think we're seeing some momentum there with that increase of 120 billion. Bsoft says, I'm 50% cash. Not that I think one candidate is worse than the other. I just feel regardless of who wins, some volatility pre and post election. Yeah, I think that's fair. And then after that election event is over, I think some of that money from someone like Bsoft could probably enter back into the market. And we'll see a decrease in money market funds. But so far, we haven't seen that yet. And I think it's just because people are mitigating until that election is done.
Belong to the credit market?
That money belongs everywhere in terms of risk on. I think the number one place it goes into fixed income like securities and credit, but it also will be deployed across the board as allocators do what they do, allocate capital for what are the better opportunities. And we're seeing this globally, by the way. All the central banks around the world are cutting rates. And so while U.S. GDP next year might come in at 2% or slightly higher, I believe, global GDP 3%, which is terrific for emerging markets, terrific for risk assets like high yield loans, private credit, equities, especially leveraged equities, where if rates come down, those equities fly. Companies that are high yield companies that have been suffering on these higher rates, that when they see lower rates, all of a sudden can generate cash flow to the bottom line. So there's all kinds of opportunities in the marketplace now.
So we'll break that down a little bit more, specifically in the private space. So if you do see that money come out and move a little bit into private credit here, I mean, what areas, where is that money going to go specifically into what areas? Because you still kind of have a lot of unresolved issues of past cycle investments here. So is it going to be a piggyback on that or something new?
I think it's all the above, because I think it's buy all credit generally as a big theme. And within private credit, there's what you're talking about is the opportunity.
But you think investors are going to do more of a basket?
So I think there's going to more of a basket. I think there's going to be opportunistic credit because of all those LBO deals at zero rates that still need to work out. And there's going to be tremendous opportunity there. And in fact, if you can buy into a book of existing, assets, from that vintage, that's probably going to be a really good deal. Okay. So number one. Number two is direct lending. With rates coming down, and this, the LBO machine is going to start up big
and that's obviously bullish for companies like SoFi because they're going to have more lending. Again, the balance on financials is their net interest income margins now that rates are coming down versus the volume of lending they can do based on the fact that they can approve more people for loans. And really, you're going to have to see how that balance plays out. But that is bullish, even with more bips, along with their loan losses coming off from their balance sheets. Now, someone in the chat has a comment here about PEs. Basically, do you think we will get a dip when PEs are so attractive? It would be a buying opportunity for sure if it does. I don't know if we're going to get an aggressive like August 5th type of dip where PEs become really attractive. But your comment brings up this picture that I saw yesterday that I thought was really interesting, and it has to do with price to earnings. So in 2000, these were the tech bubble leaders: Microsoft, Cisco, Intel, Oracle, IBM, Lucent Technologies, I don't know what that is, and then Norto. I don't know what that is either. I'm sure you guys know those last two companies. I've never heard of those last two companies. But Microsoft, Cisco, Intel, Oracle, IBM, those were the big leaders of the day back in the 2000s, right? Now we have the Mag 7, Microsoft, Amazon, NVIDIA, Alphabet, Tesla, Meta, and Apple. So what's interesting here is the percentage of U.S. market cap of the Mag 7 or of the 2000 tech bubble leaders was 19%. Right now it's 31%. So the Mag 7 have a 11% more delta in regards to the percentage of the United States entire market cap, which I think is like 25 trillion or something like that. Cash as a percentage of market cap for the Mag 7 today is 4.2%. Back in 2000, it was 1.7%. So that's a 3x difference. 24-month forward PE. So going back to the question about, hey, do we think PEs will get attractive? The forward PE on aggregate is 23.9, which is not that crazy at all for the Mag 7. I mean, really, that's not that crazy for the Mag 7, 23.9. In 2000, it was 52. 52 was your forward PE. And then net profit margin is 28% for the Mag 7. It was 16%. Again, a difference of 12% in the 2000 tech bubble. So the reason I bring this up is because the Mag 7, there's 2 points of analysis here. A, for anyone who says the Mag 7's durability is bubblish or they're overvalued or they don't have the sustainable earnings growth that the market is implying with the current multiples on the QQQ and on the S&P. I think this chart does a pretty good sort of rendition of explaining, hey, not only do they have a crap ton of cash, not only are their net profit margins incredibly exceptional at 28% when you look in aggregate, and given that Tesla and NVIDIA have pretty much hardware margins, not software margins. They're becoming more software margins, but to factor that into those net profit margins is incredible. And their 24-month forward PEs are 23, meaning on a forward basis, you're paying 23 times earnings. That's not crazy. You could argue that the Mag 7 are absolutely not in a bubble. And again, these numbers would just be different if Google was at 200 or Microsoft was at 500. And then, the numbers would be more aggressive and you could say it's a bit bubblish. Not saying the valuations aren't a bit stretched on the Mag 7, especially on Apple, but it's definitely not insane. Whereas in the 2000s, 52 is a pretty aggressive multiple to be paying, especially when the net profit margin is below 20%. The cash as a percentage of market cap was 1.7%. That means they weren't sitting on that much cash. The Mag 7 today are sitting on so much cash, which means they can deploy that against buybacks if we do have a big dip. And then on aggregate, although the Mag 7 are a higher percentage of the U.S. market cap from 31 to 19, which you could say is a little bit too concentrated, you could say it's worth it because everyone wants to bet on the most exceptional companies in the world versus small caps. And so it does feel like, for everyone saying there's an AI bubble, I mean, I don't know. I think the Mag 7 kind of disproves it, at least on a multiple basis. And you could also argue buying the Qs right now, which is basically going long the Mag 7s, is not horrible on a forward PE basis either as well. Derek says Palantir is stretched. Look, I'm not disagreeing with that. Palantir is absolutely stretched right now, but there is a reason why it's stretched. Lucent Technologies, Bell Labs, where my dad lost all my inheritance. Oh my God. I'm assuming you guys have some stories here of investing in those companies. Lucent Technologies. Dude, what is that? Lucent Technologies. What is this shit? Telecommunications equipment company. Lucent was a it was in New Jersey. That's where I'm from. Lucent merged on December 2006. Their revenue at one point was 10 billion. They had 30,000 employees. Okay, let's ask ChatGPT, what stock price did Lucent Technologies get to at the peak? Yeah, I've never heard of that company, bro. Like legit never heard of that company. Lucent Technologies. Amit, are you kidding? Lucent was amazing. Dude, I've never heard of this company. Lucent was $84 a share. It was one of the high-flying tech stocks during that era before the bubble burst in 2000. Okay, what was the other one I didn't know? Nortel. What is Nortel? What is Nortel company? Canadian multinational telecommunications and data networking equipment manufacturer. It peaked in the year 2000 as well. They filed for bankruptcy in 2009. Damn, bro. See, I don't see any of the Mag 7 going bankrupt in 10 years, dude. Or like what? That was in 2000, right? That was in the year 2000. So in the year 2000, it's been what, 24 years since then. So from the year, I mean, look at, dude, it just goes to show how crazy the comparison is when people say, oh, we're in the 2000 tech bubble. It's like, dude, Cisco and Intel have not even reached their 2000 peak. IBM this year had a good year, and that's really because of AI. For the past 20 years, it's been pretty much flat. Oracle had a phenomenal year. So Oracle, you got to give it to them. AI data centers has helped them. Microsoft's the only one that's really kept up since the 2000 and become a dominant company in the global economy. Lucent and Nortel are gone. When I look at the Mag 7 and I compare it to the Mag 7 of 2000, I don't think any of these companies in a decade are gone. There's just no way, dude. Like 2 decades. In 2 decades, is Meta, Alphabet, Amazon, Nvidia, Microsoft, Apple, or Tesla not as relevant as they are today? No way. So even the quality of these companies compared to these companies, I feel is so much better, and they're probably not going anywhere. At least I would think they're not going anywhere. Amit, you're making me feel so old. So you not knowing these companies. Well, look, these companies is Lucent and Nortel, are they like an Amazon type of name? Like if I asked 100 people, hey, do you know what Lucent is? Do you think most of them would know Lucent? Whereas Amazon, like it doesn't matter what age you are, you're going to know Amazon. I feel like the impact of some of these Mag 7 companies, given that they are, more deeply ingrained in our lives with tech, is more world known, universally known, versus like Lucent and Nortel. I swear I've never heard of these companies, bro. Today I pulled up this chart for the first time. I'm learning that these companies were a thing. They were Me Too Cisco's. I've heard of Bell Labs before. Bell Labs is like still around to an extent right now. Bell Labs actually, because when I went to Rutgers in New Jersey, Bell Labs has a good relationship with Rutgers. Bell Labs is in New Jersey. Yeah, they have a bunch of locations in New Jersey. So I've heard of them, but I didn't know they were a part of Lucent at one point. That's what people are saying about Intel 24 years ago. Intel's still here, but way lower. Yeah, well, see, that's the thing. Intel's still here. The problem is like Intel's just not done that well over the past 20 years. But the point of bringing that up is like anytime someone says the Mag 7 is a bubble, it's like, no, dude, not only are these exceptional companies, the numbers, you could say it's a little stretch, but you cannot say it's like, oh my God, this is like the most overvalued companies in the world. Everyone's just buying it because of hype. Like, that's just not the case. There's real revenues, real cash flows. There's a ton of cash to buy back stock if things get bad. And there's real innovation. Intel right here up about 1% in the pre-market. Apple up a little bit right now. Disney up a little bit. Where's Palantir? Tesla's up 1%. Palantir down 0.5%. For those that are just joining, Peter Thiel did sell about 4.5 million shares yesterday. So on those 4.5 million shares, along with the 4.6 million that he sold a couple of days ago, plus the other 7 million, he's basically had sold 15 million shares over the past week, or about 600 million shares of stock. Market kind of not reacting to it and not really caring that he sold those shares. Bitcoin 65,700. MicroStrategy really pumping on Bitcoin now at 171. Where's Coinbase? Coinbase 183. There you go. Back into the 180s after a long time for Coinbase. And then Tesla. Tesla fell yesterday to about 250-ish from 262. Now recovering a little bit at 257. It's holding on nicely into the high 250s and now breaking 260. I think is going to be the most important thing to see if we can get back to our 52-week highs of 270 on Tesla. Scarlet Knights. Yep. Scarlet Knights, 100%. Matt says Bell Labs not only laid the foundation for many of today's technologies, but also changed the way the world communicates, computes, and interacts with information. Yeah, I remember in Rutgers, they did a bunch of events on campus, and I got to learn a little bit more about them. I remember when I joined the Rutgers Entrepreneurial Society. It was like, it is one of those groups in college where like people like come together and talk about entrepreneurship. Rutgers, this is the thing about Stanford that I'll always agree with. It's like you have to have the right culture in a college when you're trying to like build young kids into being entrepreneurs, because the Rutgers Entrepreneurial Society was not very entrepreneurial. I mean, like you didn't have the energy and excitement and all that stuff of people that have all these crazy ideas that they want to build stuff. Whereas in Stanford, you know, and some of the, and even Berkeley, those schools, like I think there's just a different vibe in terms of how they think of building unique startups. And that's why a lot of the best companies still come from Silicon Valley. The energy right there is just, it's different than the energy in Rutgers. I mean, that really does matter, dude. Like, it's possible to build an amazing company when you're in some like random school, but when everyone around you is thinking the same thing, then it's like a different vibe. So Bell Labs is in New Jersey, and yeah, they did a ton of presentations, but still didn't have too many entrepreneurs in Rutgers. Robinhood right here is up a little bit. Oh, we did have some Robinhood news. They're looking to launch a stable coin potentially with Revolt, which is a private startup that's worth $45 billion. I don't still fully understand what the hell a stable coin is, to be honest. I've got to do more research on it. Like I couldn't accurately tell you what a stable coin is. So I don't know why they want to do it. I think it has something to do with like them maintaining crypto something. I really don't know. I've never understood what a stable coin is. I know it's a coin that's stable. I know PayPal has one of them. But it looks like Robinhood was looking to potentially do that. They didn't say officially if they were going to do that, but that was the report that came out yesterday. Robinhood right here, 2263 in the pre-markets. Rocket Lab, 884, not bad. SoFi getting some love at 784, given we are likely getting more rate cuts, and the PCE data was pretty good. Celsius up about 1%, TSM down about 1%, Meta up about 0.21%, Novix up a little bit, and then Enphase up 1.19% as well on the day. It's a coin that's stable. Exactly. There you go. Rutgers lacked energy in a lot of areas when I went to football games, for example. Yeah, don't get me started about our football team, dude. It's like every year, every Rutgers kid thinks their football team is going to like really do well. And then every year it's like a 5-15 record or something. It's like horrible every time. Every time. Maybe this year things will change. Okay, I know what a Walkman and a pager is. Okay. I'm not completely out of touch. I know what dude, I had a CD player. I didn't have a Walkman, but I know what it is. I had a DVD player. Like there are people that don't know what Blu-ray is. Like I had Blu-ray discs. Like I still had those I know what a floppy disk is. I used to have that in our house. Remember, I was born in 1997. So from 97 to basically 2005, if I wanted the new Jesse McCartney album, shout out to Beautiful Soul, one of the best albums of all time. Okay. Jesse McCartney, Beautiful Soul, one of the best albums of all time. I remember buying the physical CDs and playing it in my CD player. I remember it was a portable CD player as well. But then we got the iPhone in 2010, and that like changed everything. And then I had the internet in the palm of my hands. But yeah, I still remember what those like. Do you know what an LD is? No, actually, I don't. I have no idea what that is. You know, okay, yes, I know what a landline is. Dude, we had a landline in my house. We had what was the name of the company, dude? It was started with a V. I know you guys know this company. It started with a V. That was our landline provider. I forgot the name of it, but it started with a V. And then eventually it got to the point where, does anyone have a landline anymore? Does anyone have a landline at their home? There's no way. No one has a landline anymore, right? Like everyone just has Vonage. Yes, it was Vonage. Vonage, bro. Oh my God, I remember that. Vonage, are they still around? Vonage, they're still around. Holy crap. They're still around. $13.99 per line. Yo, who is buying this shit? How are they still in business? Look at this. Look at this thing. Who's buying this thing? Does anyone have a I feel like landlines have to be extinct. There's no way. Everyone just uses their phone. There's no way people. It's like a fax machine. No one has a fax machine anymore. Or not the majority of people. It was Vonage, bro. It was freaking Vonage. It was Vonage. LD was a laser disc, those huge discs before VCDs and DVDs. Oh, wow. No, I didn't know about that one. I know what DVDs and CDs are, though. I know that. And I remember where you would get scratches on the CD. Also, I played video games, like a little bit. Like I would get like the new WWE video game. And if you had scratches on the disc, then the game wouldn't work. You had to blow on the disc. Like I've been through that stuff. Like I lived that part of life. It's just I had no idea what Lucent Technologies was. That's all. I don't have a landline anymore, but I still remember the number. Dude, so do I. I still remember the number. I remember the number like it was yesterday. All right, so here's something that's gonna freak you guys out. My memory isn't amazing, but my memory is decent. I remember our first house's Wi-Fi password. You guys ready? PPHFLN5NWB3QZSJ6. Boom, baby. Boom. I take great pride in being able to do that, dude. I don't know how that ended up happening. PPHFLN5NWB3QZSJ6. There's something about it. I feel like that's like an icebreaker whenever you're at a party. You can just like bust out that fact. Now, they might think, all right, this guy's a fucking nerd or whatever, but I think that's pretty cool. I think it's pretty cool to be able to recite that. And so I still remember my phone number from the landlines back in those days as well. But yeah, there we go. It's just there's certain companies from a while ago that I don't remember too well, but I still remember some of the products that they had. All right, let's get an update on NVIDIA. NVIDIA is up about 5% this week. Let's get some analysis on why NVIDIA still is the street's top chip stock. I did not make that up. I will do it again. PPHFLN5NB3QZSJW6. Listen back to it. That's exactly the same. There's no way you can make that up. There's literally no way, dude. Like there's no way in hell you can make that up and say it exactly correct the way I did. All right, let's get some analysis on NVIDIA.
Stocks moving higher this week. Micron sparked a big rally after it said first quarter revenue would top expectations. You saw it play out yesterday across the markets. And joining us right now to talk about this is Ben Reitzes. He is head of technology research at Melius Research. And Ben, let's go through this. I know Micron is not in your world of coverage, but obviously what Micron said had huge implications for a lot of other stocks. What does this tell us about the rest of the tech sector?
Well, the data center is really strong, and they make a very important component of memory called HBM, high bandwidth memory that is very important for AI, and that's gangbusters, and that's great. And there were some concerns that they maybe were seeing increased competition, more folks getting into that market, and whether they could absorb it. And it looks like it's all systems go. And PCs, though, and smartphones are a little choppy, but they also said some good things about that inventory clearing up next year. So, that was bullish, but, we think that the data center and the stuff that NVIDIA is doing is really the one that keeps shining.
If there's not increased competition, that's great news for Micron. You could say the same thing about NVIDIA, where they don't have increased competition. It's not necessarily good for a lot of the customers of those companies because it means they're going to be paying a lot for those chips, the ones that they can't get a hold of. How do you game that out? Or is it all of this is fine because AI is so important and there's going to be so much investment in it?
Well, it depends on the component and the workload and whatnot. There's many things people use these chips for, but in the AI world, NVIDIA it just has the technology, the cadence that people can rely on. They have the software. The time to revenue with NVIDIA is the best in the business. 19 days to revenue, basically, that you know what you're getting and you can set it up and go. So for AI, NVIDIA is the best game in town, really, for enterprises and most of the clouds. But some of the companies are doing their own chips, and so we watch that really carefully. And then on the DRAM and high bandwidth memory side, there's a different cast of characters. So, but it's good to see the data center demand, really ripping, and we're starting to see green shoots in servers too, just regular servers and storage. So those markets could really pick up now.
Let's get an update on OpenAI as well, and then we'll get into the market open.
Welcome back to Squawk Box. And now for an update on OpenAI's CEO Sam Altman. He held an all-hands meeting yesterday, denying reports that there were plans for Altman to receive a giant equity stake in the company. The company's chairman, Brett Taylor, told CNBC that the board has discussed whether it would be beneficial to the company to compensate Altman with equity, but There were no specific figures on the table. That follows reports yesterday the board was considering restructuring the company to a for-profit business. Now, separately, CFO Sarah Fryer sent a letter to investors yesterday looking to reassure them that the startup is still in a strong position. This despite losing a lot of top talent that we talked about last week. In the letter, which was viewed by CNBC, Fryer saying the funding round that's underway is oversubscribed and would close by next week. Sources that say that OpenAI will raise $6.5 billion at a valuation of $150 billion. And, I know Sam has been very public about saying that he's made a lot of money already. He doesn't need more money. And that this venture started, as you know, as a not-for-profit and with no expectation that it would ever be more than a research project, right? Like that's how this began. At some point now, given the profit mode of this, but not even profit mode, it's just frankly the amount of money this whole thing requires to work. But also now the valuation, you'd like to think maybe he gets some equity. I don't know, but there's other people, Elon Musk, others would say he shouldn't get anything, right?
This is going to be such a weird situation how it plays out, bro. This is going to be such a weird situation. Amid password is I love Carla from first grade. Okay, so there was a girl named Carla. She wasn't in first grade, though. There was a cute girl named Carla, but she wasn't in first grade. That was in high school. That was different. Dude, this Sam Altman thing, this is going to be wild, man. We still have no clarity. We have no clarity on why the 3 executives left in a day. We have no clarity on how much equity he's getting. As you can see in that video, he said to employees, I received a small amount of equity. Like, what does that mean? Also, how can you not be transparent with your own employees about how much you own in the company? Like, every employee has the right to know how much stake the CEO has, especially if it's a startup that's eventually going to go public one day and worth 150 billion. I did hear one take yesterday. We got the market open in 50 seconds that OpenAI is never going to go public when they get as big as like people think they can get. So let's say $1 trillion. Microsoft's just going to eat them up. I think it's not a crazy take. Microsoft already owns 50% of them. What if Microsoft just buys out the rest of them when they go up to that level? And then AGI gets built internally inside of Microsoft via OpenAI, but OpenAI does not act as a separate entity building AGI external to the big tech companies like Microsoft and Google, Amazon, Apple, etc. Maybe that's the route that it's eventually going to go down, and investors will get liquid after Microsoft buys them out. But I also kind of think Sam Altman wants to be public and he wants to be the guy, which is why he's getting equity in some for-profit company. And I guess we'll see how it plays out over the next coming months. All right, here we go. It's been a long week. Friday, September 27th. Thank you, everybody, for being here today on the Market Open, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Palantir is at $37. Peter Thiel sold 4.5 million shares today. The market does not care. Palantir basically flat on the day. $37, still holding onto that momentum. Volume's definitely down. Usually volume over the past couple of days has been about 4 million. Right now it's 1.48 million. So you're seeing probably a little bit of fatigue in terms of the buying. And that's, I'm assuming, around the entire market, not just Palantir. But you got Palantir right here at $36.95 as we get into the open. MicroStrategy up about 2% as Bitcoin goes higher. 169. Coinbase 182. Intel 2404. Amazon 190. Costco down about 2%. Really good earnings, but probably priced for perfection. So selling off just a little bit here. Tesla 257. Tesla up 1.3% on the day. S&P 500 is green. PCE came in lower on the monthly and on the yearly, which was very good. 0.1 in the month, 2.2 on the year. So good numbers across PCE, which is why those numbers are not doing, or why the S&P is doing okay. Alibaba up another 1.24%. Bitcoin, 65,600. PayPal, $80.38. You got to give it to PayPal. I mean, they've just done a hell of a job continuing to make some momentum. And they are not doing too bad. Chris says, call me if you get a chance. All right, Chris, so I'll call you in like 2 minutes. Just have your phone with you. And I will give you a call and we'll get your take on what's going on in the macro. Robinhood 2246 up about 0.13%. Rocket Lab. Wow, Rocket Lab. Let's see the resistance at $9. That is oh, there you go. Wow. Rocket Lab, $9. $9. Yeah, we're in the nines. I mean, it's like touching the nines right here. Not bad. I get 3.55% on the day. Momentum is there, baby. Momentum is absolutely there. And you got Rocket Lab having some love right here. Wow, breaking through the nines. So there you go. Rocket Lab officially is up in the $9, and it's breaking above the $9. just incredible week. I think it's up like 30% this week. So Rocket Lab, $9.05 right here on the day. We'll get back to that in a second. SoFi, 786. United Airlines is up a little bit. JetBlue, Delta, they're slightly down. CrowdStrike is green. Enphase is green. Enovix is green. Constellation Energy Group is green. That's the company that partnered with Microsoft. Meta is green, 568. Nike, $89. QQQ, 489. IWM, 220. Small caps, those are up. And likely because the PCE data was good. Dell at 123. You got Oracle down a little bit, Microsoft down a little bit. CRM, Dan Ives upgraded CRM to $325 for Salesforce. They also got an upgrade by Piper Sandler to like $315. So they are getting some upgrades across the board. Where's Palantir? Wow, Palantir just went green. Look at that. Reversal to the green on Palantir. The first 2x long Netflix ETF is now live and trading under the ticker NFLU. Okay, so Netflix has got some leverage right here. Maybe it's not NFLU. Is that the ticker? Okay, I don't see it on yet on Webull, but that one seems to be live. We were having a conversation on Tuesday on the market close on what would it take for Netflix to become $1 trillion company? Because if you're buying Netflix right here at $700 billion, you're buying it for the potential $1 trillion opportunity, right? Netflix is at $300 billion. Okay, let's say you want to double over the next 10 years. That's $600 billion. That's approaching, $1 trillion valuation. If you get to $600 billion, I would imagine they can get closer to 700-800. And I don't really know what's the catalyst to get Netflix to double from here or to go to $1 trillion. And that's the hard part with me on Netflix. Now, maybe that's short-sighted because they're the only profitable streamer and content's growing and they're going to be the sort of monopolistic winner in that space. But to get a double out of Netflix, even over the next decade, I feel like is going to, I don't know, it might take a lot of work versus something like Google or an Amazon or something where the tech is high in demand. Costco at 879. Costco now getting a little bit of pain, down 2.5%. Amazon at 190. Intel 24. Palantir, nice reversal to the green. Hit 36.81 for like 5 seconds. Now back into the 37s, which is not too bad. I would definitely not buy a 2x leverage Netflix ETF because if you already think Netflix is a bit up there, then it would need to move a lot for you to get any return from like a 2x ETF. So that one would be, and the downside obviously would be if Netflix falls 10%, that would fall 20%, right? So that one could be a bit more volatile right here. Google at 164.74. Where is Rocket Lab? Rocket Lab is, oh my. Folks, I think what we are seeing on Rocket Lab, and I can't confirm this, but I think what we are seeing is a move potentially that is as similar to ASTS. ASTS, you guys remember, they got a big space contract. It's down 4% today, but they pumped like 500% in a month or something, or actually it was like 2,000. It was some crazy thing. I don't think Rocket Lab is pumping 500-600% in a month, maybe. But I do think that the momentum from that space trade is now bleeding into Rocket Lab. And along with the fact that it's still 18% sold short, that's a pretty compelling scenario for Rocket Lab to potentially have a pretty aggressive squeeze, especially if they announce any contract or any rocket launch that is exciting for the broader market to take a hold of. It is neutron speculation, probably that as well. That could be definitely something that's leading it to get up there. For those that are holding Rocket Lab in the chat, do you guys think this is normal? Do you think this is real? Do you think this is hype? Do you think this is FOMO? Do you think this is short squeeze, or are you kind of worried that this is a little bit too quick? How are you thinking about it? As a more objective party here that doesn't have a big stake in Rocket Lab, I kind of feel this is very similar to the other space names that caught a bid this year. Rocket Lab didn't catch a bid for the majority of the year while the other space names were pumping. It kind of makes sense that now Rocket Lab is having some good news and they're catching that space momentum. And even if it's a retail driven, it's retail driven. People are betting on the overarching TAM of space. I don't know if this is institutional. It feels a bit more retail, but I don't think that's the worst thing in the world, especially with a stock that really hasn't moved for the majority of a couple of years, except to the downside. Lunar's up 5% as well. Yeah, all of space, I would imagine, is getting a little bit more of some momentum. I need to get out of my $8 covered call expiring. Well, here's the thing. I know some of you guys have $7.5 covered calls. I wonder if those covered calls are actually going to be like issues, or you're going to be able to easily get out of it. Because theoretically, $7.5, $8 covered call, you should be able to get out of that easily because these moves take a retracement. But Rocket Lab has not shown that it wants to retrace. It's kind of doing the same thing as Palantir. The $32 covered calls are still underwater on Palantir because Palantir is just not retracing from these $37 levels. But liquidity is there for Rocket Lab, and it's gaining some momentum, up another 8% on the day. That means it's up basically for the week. Rocket Lab stock for the week, for the month, 50%, for the week, 23%. Not a bad move. Not a bad move at all. Chris says, I think Rocket Lab is like Path in February 2023 or December 2023, and wondering if it's going to drop back down to another bottom. If so, that's where I'll jump in. Yeah, I don't know. I think the hype is getting real on Rocket Lab, and that hype is giving it more momentum. MicroStrategy at 170. And again, we talked about a lot on the channel yesterday. Companies need narratives. Rocket Lab's got a hell of a narrative. They've got a hell of a narrative. Look at that, 940 up 8% right now. Even if it is a bit retail, momentum, FOMO jumping in, they have a narrative, and that narrative is exciting. And you could see if people discover that narrative that they're more likely to get interested in the long-term opportunity. Alibaba 106, Tesla 258, S&P is green, Nvidia slightly red, down about 1%. We will have TJ join us, I think, in like 20 minutes. I'm pretty sure he'll be joining on the show today, and we'll talk about everything we're doing in the public portfolio and moves that we're making. And so he'll be on, and we'll discuss all that stuff. IONQ is ripping. IONQ. Wow, that one's up 15% today as well. Yeah, this is another ticker that's had an interesting year. Lots of people have mentioned it. Year to date, it is still down 20%. Over the past month, it's up 27%. It's down 23% year to date, up 27% over the past month. IONQ announces largest 2024 U.S. quantum contract award of $54 million with United States Air Force Research Lab. So they got a $50 million contract. That's why they are up 14% right now on the day. Palantir at 37.20, still holding on to 37s. Google at 164, SMCI 411. SMCI actually catching a little bit of a bid. That's up 2%. Tesla 257, getting back to some of the levels it was at yesterday. Hood 2248, kind of flat on the day. SoFi, okay, SoFi getting some love, up 2%. Hopefully we can break back into the 8s on SoFi. Oh shit, I forgot I had to call Chris. I totally forgot. Thank you guys for reminding me. Let me call Chris. I like legit forgot. All right, let's call Chris. He's like at the phone just waiting for this phone call. Let's get his thoughts on the market. Chris, what's up?
Hey dude, what's up?
What's up? How are you doing, man?
Good. I was like, the elevator music is playing in the background. Like, what is going on here?
I got into Rocket Lab. I forgot. I was like, oh my God, this thing's mooning. Dude, a lot has happened. I think you haven't been on the show for like 2 weeks, so I want to get your thoughts on a bunch of things that are going on right now. But before we get into everything with like China and oil prices, in general, the market, we're kind of approaching extreme greed. Are you feeling a little frothy, or are you thinking we're good to go and we just have to keep showing good inflation data to keep this rally up?
So it kind of depends on what part of the market you're looking at. There are definitely still some great value opportunities in the market that are worth exploring. The cruise lines, I keep harking about this, but they've done well, and they're going to keep doing well into next year and the year after that. We do have a bifurcated economy, which is one of the reasons why some of the data that's coming out seems distorted. So it's like, oh, consumer spending is down, but then you're like looking at like certain earnings, and earnings are up. So it just goes to show that there are part of the consumer market that are really weak, and then other parts of the consumer market that are really strong. So you just have to really deep dive into the category and figure out like, what does this specific company cater to? Does it cater to the bottom end of the market, or does it cater to the top end, or does it cater into the middle? So based on that, you can kind of ascertain whether or not they're going to have a healthy consumer base, and thus be able to grow their profits. But I think the most important thing to talk about today, though, Amit, and I don't know how far in depth you went into it yesterday, but it's goddamn China.
Okay, so let me set this up. So I have done preliminary research on what they've done with stimulus. We all watched the David Tepper interview on the show. Relatively ignorant to how the stimulus is going to really affect their economy at a high level. It's good, and we talked about all the things they did. But what is your take on what they're doing? And can you give us some nuance on the idea of trusting China versus potential short-term bandages that they're putting on their economy versus no, it's a long-term multi-year cycle for China? Which camp do you fall in, and how do you reconcile all three of those arguments?
Well, the first thing we have to do is kind of look backwards, and based on the backwards data, then we can kind of like make some forward looking statements, right? So one of the things about China in the past, China has always been in like growth mode. So it's like grow. And anytime they've, slowed down a little bit, China typically invests a ton of money in infrastructure, right? So essentially they don't really give money to the consumer. They're more like, hey, let's spend more money on roads, bridges, and things like that. So one of the big differences between the past and now is that this time around, the Chinese are actually doing more like consumer-focused stimulus. So yes, we all heard the part where it's like, oh, the Chinese government's encouraging, companies to buy back their own shares, and also at the same time to borrow money and buy back shares. So there's a lot of stimulus in that regard. But one of the things that I think the market is missing is just how big of a deal it is to the Politburo this time around. Like Xi Jinping himself has come down and said, this is something that we are going to existentially work on. When it comes to the Chinese markets, basically, with all these trade issues and tariffs and stuff, one of the big vulnerabilities with China being the factory floor of the world has been that, they haven't necessarily been able to sell a lot of their stuff outside. And because of that, they've got a lot of overcapacity. So one of the things that, they're doing now is trying to grow their domestic base. That domestic base is it's going to take time. It's not something that's going to happen instantly. But what's happening is money from the main federal side is moving to the state levels, and then the state level is now encouraging consumption to the consumers. So if you have a minute, you can look this up. Look at China gives out vouchers to people. Like literally, China's giving out free money vouchers to people right now.
Like stimmy checks?
Yeah, stimmy checks, but more like, hey, if you want to buy like a washer, dryer, here's a like money for you to buy it, as long as it's kind of made in China, or made. I mean, everything's made in China, but basically it's a domestic company within China that's manufactured. Same thing with electric vehicles.
So the idea is to get people to start spending more. That's it.
Exactly. So think of we did a similar program like this in 2008. You remember Cash for Clunkers?
I've heard of that before, but I don't remember exactly.
Okay, so maybe this is a little bit before your time, but basically what happened is in 2008, 2009, the economy had gone to shit, and the automotive sector was pretty much on the brink of collapse, right? So GM, Ford, Chrysler, they were like hemorrhaging money. So the federal government said, well, we want to give these guys some support to keep our domestic manufacturing base. If these companies go out of business, we might not be able to recover that. So what the Obama administration did at the time was create a program called Cash for Clunkers, where if you turned in your old car, right, you would be able to take money and use it for a new car. And basically that encouraged a lot of people to take their old gas guzzling cars and buy new cars. But the thing is, a lot of these new cars are American cars, right? So it kind of helped build that domestic consumption model. So that's happening now. In the past, the Chinese were more into, hey, let's just invest into infrastructure. Now they're more like, hey, we need to do direct on the ground support to low and middle income consumers.
Why are they changing? Well, what has happened in the past 2 weeks that caused them to change?
Well, number one, they had a Politburo meeting that basically discussed all the stuff that's happening, and the deflationary wave is hitting them now. So in the past, they kind of were a little bit more like, hey, we'll do some stimulus here. This time, there's no like, hey, we're doing stimulus. This time is we're doing stimulus and then some. And then on top of it, you've got this giant social engineering system that's built in China that basically they can utilize to encourage additional spending. So imagine right now with the social credit scores, the social credit score system, it is going to be telling people you need to go out to save your country. You need to go spend money. Here is free money. Go spend it.
Yeah.
That is what's happening at that level. Another thing is the property market. Basically, they're consolidating the property market right now, where there's not a lot of new stuff that's going to be built, but more of the old stuff is going to get built out like it's supposed to. And then also at the same time, limit the amount of new homes. So property values are going to come up. So the key right now, there's two things. One, get the consumer to be more forthcoming when it comes to spending. And at the same time, rescue some of the industries out there that have been hurt by this downturn. So the property sector is probably the thing that caused this massive downward move in the first place, because what happened was, it's very similar to us in 2008. Property values went down. When property values collapsed, people, all right, dear, I'm on the phone.
Dear, I am on a show right now.
Yeah, so basically with the property sector, a lot of people, they had their net worth tied up in their property. So the problem is, because they're tied into their property, if the property values go down, people feel poor. And if people feel poor, they're going to cut back on spending, right? And if they cut back on spending, that means that domestic manufacturing, that capacity that they built out, is going to get underutilized. And now that's going to cause deflation. And that's going to also cause massive amounts of growth shrinkage. So this is where we kind of have to ask ourselves, what is the solution here? And the Chinese government is doing everything in their power to get around this. That's why David Tepper has been super bullish now. And I think this is a kind of a crazy setup that we have, where Chinese equities have actually been a pretty big target for short interest.
Yeah.
So not only are you you have a market that's short, that's heavily shorted, but then at the same time, from a valuation perspective, most of these guys are trading at single-digit PEs. And then all these other American companies, they're all trading at extremely high PEs. So any fund manager worth their weight right now is more than likely looking at China and saying, we need to start pivoting quickly before the bag is out. And so one of the things I've been watching is CNBC interviews, and some of these, and I'll tell you right now, CNBC has a lot of fucking garbage people that come on there and oh no, this is just a short-term thing. Motherfuckers are probably loading this hand over fist in the background while they're telling everyone on CNBC, no, this is just a short upward move. No. This is a huge shift in what's going on the ground.
So are you going long China?
I am long China. I yesterday morning, after reading all the stuff that's going on, I went long China.
Do you feel at all that you're jumping in too quick, and that
this time around? Not, dude. When the big one of the great things about communists and socialists, whatever, is when the big boss says something's going to happen, it's going to happen. So Xi Jinping has said, we're going to get domestic consumption up. It's going to go up.
So your argument here, so this is an interesting question. Most people would say against you, hey Chris, they're communists, you can't trust them. Your argument is actually turning that. You're doing what we call a link turn in debate. You're turning that argument and you're saying, no, because they're communists, they're going to do everything they need to do.
Exactly. And the thing is, unlike other countries where, with the US, we have to deal with Congress and we have to deal with X, Y, and Z and bureaucracies and all this other stuff. Look, they have a very efficient system where they're very dictatorial. So they can just go out and dictate how things are going to work. That's how they were able to move up from one of the poorest countries on the planet per capita to probably one of the more middle income countries on the planet. That does not happen with 1.4 billion people on there. Now, here's the thing. They have some structural problems in terms of demographics that could hamper them a little bit. But I think they are smart enough to navigate around all of that stuff.
Are you afraid? Are you afraid Xi Jinping comes out one day and he says, "Hey, I don't think kids should be on their video games under the age of 10 or whatever," and then Tencent falls 10 billion market cap?
Nah,
you don't think those regulations that they did a couple months ago would happen this time again?
No, it didn't happen a couple of months ago. It happened a while ago. But no, and all of those things are social engineering issues that, yes, sometimes the party does get a little bit too zealous with. But at the end of the day, everything is about control. if they're seeing that the populace is basically unhappy, more unemployed, that is what causes mass revolution on the streets. The one thing the CCP has a very big insecurity against is mass uprising. So the thing is, you want to keep your people, you want to keep them under control, and the way that you keep them under control is you keep them happy and fed, and you also have them employed. So that's the thing right now. So yes, when times are good, you can be a little bit more heavy-handed with the social engineering aspect. But when times are not good, you need to be a little bit more loose on that end, be more economically forceful. So right now, China's going through this economic forcefulness where you're getting a shit ton of stimulus to boost growth so that it calms the people at the lower levels down. The last thing you want is a bunch of people on the streets rioting because they're unemployed and they're starving. So the CCP right now will do everything in its power to get their economy back. They're smart enough to do it, and they're forceful enough to do it, and they have all the mechanisms in order to do it. And they not only do they have the mechanisms to do it, but they're not afraid to use those mechanisms. So
what are you buying in China?
Believe it or not, I'm not sure I'm buying anything individual name. I'm just buying the indexes, and I'm just chilling on that. The indexes, and there's two main indexes. There's the BlackRock large cap ETF. That's one, and another one is KWeb, which is more focused on the internet companies. But either way, China is the play to be in. I think I wouldn't go super crazy with my exposure and okay, I'm going to go full port China, but the opportunity definitely is there for China. And especially in the coming couple of quarters, Chinese lunar year is coming up, and Singles Day for Alibaba. And so traditionally, this is usually the few quarters where there's a tremendous amount of spending in China. So fourth quarter of 24 and Q1 of 25, you'll see a lot more spending. So,
Chris, do you think you've always been a value investor at heart, and now you're just coming back to your original value investing Charlie Munger roots with China, right? Because
I would say yes and no. The thing is, you can be a value investor, but get the thesis wrong because you don't apply some prudence when it comes to what is that thing called with regulation and things like that. So you know how they say just because something is cheap doesn't mean that it's actually cheap, right?
Yeah.
So it's almost like these everything money guys. They've always been showing charts of Alibaba. Look, it's cheap. But then it's they never really took into consideration the political risk, where the government was basically finger banging the entire time. So it's okay, how are we going to navigate this now? Everything money is correct. The valuations are super low. But now the Chinese government, instead of slapping them around, is saying, no, son, go out there and produce, so that's a big difference now. So I think that's the thing. You can't be a value investor only in things okay, yeah, just because the valuation is low, this is a great company to be in. No, you have to look at the environment around you and say, okay, first of all, why is it a value company? Why am I getting this discount?
Right.
If you can't answer why you're getting that discount, you probably. So.
Okay. Last question for you on China. If anyone says, oh, you're un-American because you're investing in China, what would you say?
I'm a capitalist, baby. All right. It's all about making the money. You can't get any more American than that. Okay. I will sell rubber dog shit and make money. That's what makes me American. If there's alpha to be made, there's money to be made, I will freaking make it, okay? And I will pay my fair share to Uncle Sam, who's going to rake me over the coals because I've had some great gains this year. So at the end of the day, y'all should be backing me 100%. Be I hope this guy makes so much money that Biden comes in and is able to tax him to death, okay? So just go in there, yeah.
All right, I love it. That's actually a great answer. All right, last couple questions. Rocket Lab, fake or no? This 12% pump we're seeing.
I think this is something I brought up a couple of weeks ago. I think there's a general trend of maybe space is the next frontier, and some people are front running it. I'm not 100% behind it just yet, but I do think that there's opportunity in this space because how there's themes that have been coming around where like AI, right? Like everyone in AI is making a crap ton of money. So I think there is a space theme that might be in the early innings right now. You know, so that's why you saw that run up in ASTS. Now you're seeing Rocket Lab. So whenever you have this theme coming to light, it isn't necessary to basically have all the valuation and all that stuff make sense. Like it's just everyone is just following the theme right now. So space could be the next frontier of growth for the world. So I don't know. And by the way, the TAM for space is freaking unlimited.
Yeah,
as far as I'm concerned.
Yeah.
So. Yeah.
Okay, last question just on JPOW, the next 5 weeks. I'm assuming you think it's a little rocky until after the election, but it looks like we're going to end out September green. It's first green September in a couple of years. Is that concerning, or is that kind of just, hey, we're in a really good market and the jobs data, the unemployment, everything is on the right side?
I mean, everything is hunky-dory right now, man. There's no, as far as I can tell, there isn't any major risks that are upon us. In terms of valuations, they could be a little bit better. They are all on the high side with U.S. equities. So I'd say you just have to apply some caution, you know, because the thing is, like, remember, the market's all based on expectations. If the expectations are too high, you know, you could get re-rated down very quickly. And if the expectations are too low, you could do well on the other side when the expectations are met and or exceeded. So it's all about where you're benchmarking. Right. If right now, that's the way I would approach most U.S. equities. Like, is the expectations overinflated? If they are, then I'd say, you know what, buy some protection. This way you're not stressing overnight. And then at the same time, if things are overly cheap, then hey, maybe instead of just buying regular shares, you could buy some calls, long dated, and then wait until the thesis plays out. But at the same time, not risk a ton of capital, you know? So
I actually have one last question. Oil. What are your thoughts on that?
I have no idea, man. Just got to call Matt and ask him because, bro, every day it's like a new story with oil. And that's the thing. Like, there's so much cyclicality. Technically speaking, the Chinese stimulating should boost oil demand. But at the same time, there's a ton of supply all over the world, too.
But it's good that it's coming down, right? For inflation and for...
it's definitely good for inflation. It's definitely good for inflation, you know. So
you wouldn't like investing in oil right now, though, even with this discount. You don't know enough about it to kind of.
There's just too many X factors, man. I mean, you never know. The Israelis might throw like a bomb on Iran, and all of a sudden oil goes to 100, or at the same time, this happens or that. Oil is one of those things that's literally like a dartboard, and wherever you throw it, it lands somewhere. And
right.
I don't know if I can make a qualified investment decision based on that level of randomness, you know?
Okay. Got it. Chris's Twitter is in the chat. He has a Patreon you guys can check out as well. Chris, thank you for joining.
Nah, Patreon's all full, bro. It's all locked down. It's all
okay.
Full,
so there's no more Patreon.
Good. Thank you.
Okay. But you can go to his tweets.
Appreciate the support. Thank you.
All right. Thank you, Chris. Talk to you later.
Later. Bye.
All right, folks. So that's Chris's take we got on the broader macro. We're going to bring up TJ, the wheel deal now, and we're going to take a look at the public portfolio, what moves we've been making. We made a couple moves this week, and so we'll show you guys some of the plays. And then if there are any new ideas where we want to deploy some capital, TJ, what's up?
What's going on, Amit? How are you?
I'm doing very well. How are you, sir? I think your portfolio's had a fun week this week.
It's good. It's good, man. It's been a fun ride. It's been a fun ride. But we've earned it, man. You know, we've earned it from the standpoint that we've sold puts, we've sold calls, we collect premium. We've invested in China before everybody was on Jinping Ching's wings, ramen, nutsack. I did all that before, so I don't want to hear y'all's bullshit. I already took the victory lap twice, motherfuckers.
When? Oh, because of NEO. I forgot. You have 70,000 shares of NEO. I forgot.
Yeah, so y'all got to look at shit at the distance, guys. It's real easy to see who killed who at the end of the movie, but you got to make these determinations as the evidence starts piling up. You got to place your bets. Now, there's definitely money to be made, but be careful, man. Be careful. China invades Taiwan, and nobody cares about the stock market. We're all just trying to figure out if we're going to be breathing.
Well, that's one thing. That's one thing I didn't ask Chris if China invade, but hopefully China has less incentive if their economy does better to invade. Maybe.
Yeah.
So
who knows, man? Who knows? The only reason I invested in NEO is because I believed that battery swap was going to be a thing, and I thought the cars were pretty. It was very high level thesis. I thought battery swap was going to be a thing. I thought that these iPhones were a pain in the ass because what it usually gives out is the battery. I have several friends that have Teslas, and what it gives out eventually is the battery. The car is intact. So I was like, well, you can keep swapping out these batteries. It's great for the consumer. I don't necessarily know how it's great for the company, though. Yeah. That's the part that I still haven't figured out, but I don't question things. I just try to figure out how to make money. Let's get into it, my man. I'm on fire today. Life's good. God's good. I want to show you guys how we sell puts, sell calls, collect premiums. Admit, read the scoreboard. How's it looking?
So net premiums. First of all, for those that are new to the channel, we've been doing this for basically the past 8 months now, since around February, March, and we have about $1 million that we're working with out of TJ's 7 million public portfolio, and we are selling puts and calls on it to try to collect premium. So net premiums collected 265 grand. Total open collateral about 1.2 million. Open P&L on the actual shares that we own 85,000. So the current amount we are up is 351. 265 has been realized, and the other 85 is what we're up on the stock.
Right, and then this is the actual shares that have, or these are the tickers that have contributed to that. You got Hood, Shopify, TSLL, and then it tells you there in parentheses shares owned. Hams contributed NVDL. Path, I lost money trying to buy the dip. NVDA, NVIDIA, we're still in that one. Snow, we finally closed that dog with fleas for a profit. I'm excited to be out of that one. BITX, Meta, AAL, CrowdStrike, CleanSpark. So about 10 stocks, about 10 tickers, Amit. And I think that that's the first teaching segment is, guys, you want to try to avoid shiny object syndrome, and you want to really wrap your mind around 5 or 10 tickers and make it living there and treat it like a business. Learn everything that you possibly can about these stocks, how the horse runs, etc. When it wants to be fed, when it goes to the bathroom, etc. How does it play in the field with other horses? I grew up on a farm, so I learned that kind of stuff about my horses, and that's the way that I treat the stocks. Like how do they react to positive earnings, negative earnings, a good story, a bad story, etc. I mean, you want to learn, how your stock moves, right? And also fundamentally, is the story intact, and then do the numbers support that story? So let me pull up the big update here. We're at all-time highs. And then
while you do that, we got Rocket Lab here, folks, at $10. So congrats to the Rocket Lab shareholders.
Shout out to Matty Mula and Vince's bullish, guys. They kept touting this damn thing. They were selling it like junkies on the street. And I bought in under $4 and I got 20,000 shares, and I barely looked at it this morning.
Wait, you do? You have Rocket Lab? I didn't even know you had Rocket Lab.
Yeah, it's not in this portfolio. It's in my repo.
Oh, gotcha.
Dude, I have it under $4 because of those guys. I've listened to one earnings call, and I've watched like 2 or 3 videos along the way, but I don't even really know what they do aside from, I think they have a deal with NASA and something else. There's something called Neutron. I don't know if it's fucking Jimmy Neutron, the cartoon, or what. I don't know anything about it, but what I do know is that everybody's excited about it, but I don't even know if they have enough money to see this thing through, or if we're getting really, really excited about something and there's dilution in the forecast. Like, those are the things I don't know. So I am considering starting to sell covered calls here, and then like learning about like what is it that I actually own here, because it's it's always nice to be up 2x and a half or whatever, 2.5 on your investment.
And when did you invest? A couple months ago?
It's been about like 90 to 120 days. It was down in the dumps. It was down in the dumps when everything was kind of like, are we gonna keep going on this bull run, or are things going to pull back? Hard to say. But let's get started, Amit. Where do you want to start, man? We've got some stuff that's expiring. Shall we talk there? We've got Hood calls expiring today, and we've got NVIDIA calls expiring today. And then I'm dealing with 100,000 shares that could get called away on Riot today. So I've got to figure out how to navigate those waters.
Let's do NVIDIA first, then we'll do Hood.
Okay, so NVIDIA, not a lot of pressure right now, but that could change. So we sold these on September the 3rd. So we didn't pick up a lot of premium, $975, and here we are. It's 927. Shout out to my dad, guys. His birthday tomorrow.
Oh wow! Happy birthday to him. That's great.
Yeah, born in 1950, so he's gonna be 74 years old, man.
I love it. What are you doing for the birthday?
We're gonna go hang out with my mom and dad. My brother's coming into town, and my dad he started drinking at a real young age, like at 14, I think.
Yeah.
And he stopped drinking like a year and a half ago. So his mind's not like all quite there. So guys, if you're kind of heavy drinkers, like be careful. There is repercussions. And my dad's like, he's still there, right? Like he's still very functional. But sometimes he can't kind of like, and he's like, man, I really wish that I'd have listened to you 10 years ago and like slowed down on this shit. But my dad was like 17 for 50 years. You know what I'm saying? Like he was always treating every day like Friday night.
Yeah.
So he has to pay the piper for that one. But here we're good, Amit. What do you want to do? I mean, I
think let's close it, bro. Because
there's no reason to be in it, right?
Yeah, I mean, is what another $200-300 we can make? I think.
No, $80, dude.
$80. Okay, yeah, let's get out of it. So what we're doing right here, we had covered calls on Nvidia. We made a bet with the market that on 9/27, Nvidia would not be above $27. Nvidia is currently at 122. Yesterday, we had 500 shares up for sale. Nvidia was 128. If it was still 128, those 500 shares would have been called away at the price of 127. We probably would have rolled the contract, but theoretically, we would have had to sell our shares at that strike because Nvidia is below 125, which is the beauty of covered calls. We got to keep the premium, we got to keep our shares, and we can do this again and collect more premium with our shares.
Right. So what are you thinking? You want to just kind of let the market play out, or do you want to put these shares up for sale again? Because I mean, it's been a nice rental. We're pretty much right at the cost basis. I think the actual cost basis on the shares is around 125 and some change. So,
I'm down to put it up for sale again, but do you think we'll get good premiums today, or should we wait until a green day?
I don't know. I mean, well, look, I mean, does Nvidia have earnings coming up or anything?
No, I think it's late November for Nvidia.
Okay, so I mean, you want to just like see what it looks like a month out?
Yeah.
I mean, I kind of like it over here. Like say 127, we're looking at selling it for a profit now. It's very aggressive. We want to go a little bit more. 128, it's a 39 delta. We're going to pick up like $1,500-$1,600. That's not the worst thing in the world.
I don't think it's worth. And also, if they do get called away, at the end of the day, we made some money. It's not
we're making a little profit, so that's not the horrible thing.
So what we're doing right here is we're putting up 500 shares for sale. We're getting paid $3.95 a contract, which is $395, and times 5, that's about $2,000 that we're picking up.
Yeah. So hopefully it'll fill. If not, I think it might have. There we go. Yeah, we're good. It filled.
All right, so we just picked up 2,000. Yeah. Rocket Lab, real quick, guys. Rocket Lab 1023. I think we're seeing a squeeze, folks. So if you're in it, I don't know. You either sit back, you take some profits, you got to make that decision. But we are indeed seeing a squeeze up 18% right now. I think it's a squeeze. There you go.
Yeah. What do you think about this amazing dividend that I picked up? Did you check this thing out?
I mean, I saw your dividend post last night. You are a dividend. You got to replace Steve. You're the dividend streams now.
Yeah, I'm TJ, the dividend collector. We're changing the name today.
Changing the name, baby.
I mean, when you pick up $5 in dividends from Nvidia, I mean, oh my goodness, you know what I mean? Forget about cover calls and cash accrued. Put this divvy here of 1 penny a share, bro. What is this dividend even about? Like, is this like? I thought this was a joke. I thought about literally emailing Robinhood and being like, yo, where's the rest of the divvy? And then I go pull it up, and this is exactly what this amazing company is offering up. 1 fucking penny a share, bro. Like for real. Like, is this a joke?
Well, if the stock goes up 150%, you don't need a divvy. So there you go. That's fine.
It's just great. But I'm just saying, like, why did they even announce a divvy at that level? Like, it just seemed kind of silly to me.
Yeah. All right, cool. So we have this new Nvidia call. So, all right, perfect. So we'll deal with that in October. So let's go to Hood because we have to deal with this 23 call that we have on them.
This one kind of worked out. I mean, it was a pain in the ass for a while, but now we're here. Now we're here. We could close it out for 550, or we let it ride. We can roll it. This has been rolled. A couple weeks ago, I rolled it September the 13th. Got 1350 going from 22 to 23, and then now we're here.
So this is the fun thing about covered calls. Again, sometimes you can get your hand caught in the cookie jar, and we've had that happen on the channel plenty of times. But this was a covered call at 22 when Robinhood was 19. We have 5,000 shares, so 50 contracts. Robinhood started going up. We rolled it to 23, expiring today. Robinhood's just below 23, so if we close it right now, we can get 80% of our money, 2,700, and we get to keep the 5,000 shares.
Correct. So what do you want to do?
Not the worst thing.
I mean, this is ultimately, I feel like it's your trade from the standpoint that I don't follow the company that much. I know that there's a big event coming up, right? When is that?
There is indeed a big event. That's in October. So it's good that we close these out now. Bitcoin as well, guys, 66,000. That's helping Hood. That's helping a bunch of stuff. MicroStrategy. Let me check that real quick. MicroStrategy is up 5%, 175. So Bitcoin is helping.
So when you sell covered calls, guys, and you're like a little bit unsure, just to go back to NVIDIA real quickly, the reason that it's a real good idea to try to collect that $1,975 is it's also a little bit of a hedge to the downside. Let's say NVIDIA tanks like 115, it kind of helps you to absorb the pain, thinking, oh shit, I could have sold it at like 124, 125 or whatever. So it's like, if you're going to be long going, you collected some rent, it's like whatever, you know, you'll deal with it in a month down the road. If you're long this stock, you want to hold on to these shares theoretically for a year and a half. And I'm looking at another screen right now. Amit, do you know what our cost basis is on NVIDIA right now on those 500 shares?
I think it's like $95 or something.
Yeah, it's $88.53.
Yeah, that's not too bad.
We're really manufacturing the win there, considering that we started at like 132.
So when TJ says adjusted cost basis, it means on those 500 shares, all the puts and calls that we've sold on the shares, the premium we've collected, you subtract that from the price you bought the shares, which we bought them at 132, because we're using those shares to generate a return. So technically it is reducing our overall average for those shares. And that's helping us because now it's under $90.
Yeah, absolutely. So here you wanted to close these, right? It's 50 contracts. Is that
Yeah.
right?
So we're going to give back about 500 of premium. So we have to give back some money to buy to close the contract, but we keep the difference.
And we free up the shares.
We free up the shares.
Hopefully we can get those to fill. It might take a little while, so we'll just move on and hopefully it fills. If not, we can offer up another penny a share and call it good. So that's all that we got here. I've got this big position here. Maybe you can help me navigate it here. This one's tough, man, because I've got all of these shares for sale at $8, and Riot is of course approaching $8. It's 45 delta, so it's like a coin flip right now, whether these would expire in the money, out of the money. You can see all of the premiums that I collected when I did this. I scaled into this thing. All right, so I got the 2,600, 2,600, 1,200, 46, 46, and 23. So that's all the premiums received. And now we're here. You know what I mean? And now we're here. So it's like I can lock up half the money, call life good. A couple of days ago, I could have locked up like 15,000. But
Right.
I waited. And here's the danger. Here's the danger with this position here, guys, is I actually own these shares for $8.39. So there's not a world that we live in that I'd be okay selling them at $8, because I would realize 39 cents a share on 100,000 shares is 39 grand. So it's negative, right? Like I would legit lose money there, and I don't want to do that. I want to be long this company for a while. So do I wait, Amit, and try to just collect the rest of this data? Because this essentially, I mean, I'm in the driver's seat theoretically, right? Because I've got a break even of 818.
I would close it, dude. You're up 50%. It's 2 cents away from being called away. I would close it.
But if I wait until noon and if the price action holds, I'll be up more like 80 or 90%.
I mean, that's up to you. If it's, I mean,
that data right there, that data is real, dude, because it all comes to a head today. Remember back in the day, I said that these Greeks are all like little worker bees and they got to get this thing from -1, 0 to +1.
Yeah, but what if we bust through $8 by noon as well?
Then I think that then that's a good thing, because now I'm making money on the stock, and then I would just roll those shares. I would roll those to like $8.50, $9 a month from now. And then now I'm on easy streaks. I'm like, dude, here's the shares legitimately. I was bluffing before you caught me, but now that's a good thing because.
But you said a month from now, if in a month from now Bitcoin is at 70K, those shares are gone too, right?
Yeah, no, well, again, whenever I say I'm long the stock, dude, I don't mind dealing with this for the next 3 to 5 years. But I want to be in Riot probably for at least another year to see this bull run through. And ideally, I would like to have maybe a $15 to $20 strike price. And if somebody wants to own my shares at 15 to 20, you know, they're right there for you.
Right.
But in the interim, I got to bring a lot of money through the door because, dude, this thing could go. Everybody's all excited because right now it could go to like 9. Well, dude, it wasn't that long ago that this damn thing was in the 6s and I was picking up shares, you know? And I think that that's where people have to, you can't lose sight of the fact that this thing on September the 6th was at 638, causing me a lot of pain because I was down 200 grand.
Right.
You know what I mean? And the people over here, well, you forget about all that real quickly because the greed side of your brain takes over. And I don't work that way. I'm like, no, dude, I know what this thing can do on the other side of things because I've been there very recently. And I would like to maybe get rid of these shares in this area right here. That wouldn't be the worst thing. And then just play it via cash secured puts. But I'll have more information because we're going to Irvine. And I'll meet with the execs there at that roundtable discussion. Hopefully, I'll get asked a couple of questions, and then I feel like I'll have more of an idea of the direction that the company's going and the direction that I want to take as an investor with the company.
Right.
So, yeah. For now, I'm going to hold, and I'll revisit this at noon because you see, it's already going up to 60% right there, right? Because everything.
Wow. Yeah, that's true.
Everything, bro, everything's dicey when it's expiration day. And so I can get to like 70%, then I'll be like, okay, cool, here's your $3,000. So this is one thing that I can do is I'd be like, okay, I'll buy to close and I'll put the 1,000 shares there, but I'll be like, I'll only give you 5 cents. And then now I don't have to mess with it.
Right.
You know what I mean?
Play out. Yeah.
And then see if it'll let me. And then you see it releases the 100,000 shares. So I'll just hit submit there and then just kind of leave it alone. And then maybe it'll fill throughout the course of the day. So that's an exercise that I do a lot if I don't want to sit there and monitor the screen, and kind of hypnotize the market there. You know what I mean?
Yeah. Can we look at our BidX position? Because
1 second. Can you mute me?
yeah, I got you. We got some people saying they're making 1.5% dividend off BidX, which is insane. The dividend there is pretty incredible. Again, this is a leveraged ETF, but it is paying a dividend. I know, TJ, you got a dividend last night, and we have some options on it as well.
So here's BITX, dude. This is one that, truth be told, I wish it was a bigger position, but I understand why it's not because it's a leverage play on Bitcoin. So I don't know.
Is that Travis? Or what's the name of the dog again?
No, that's Duke. The little one is Gavin.
Gavin.
Yeah, we have somebody picking up boxes because I wasn't able to fit them in our trash. So we called somebody from the golf community to pick up our shit.
Gotcha.
Yeah, so we have the 3,000 shares at 26.21. So that part's pretty hunky dory. And then we have collateral, 72,000. So that means that we've got an obligation to buy $72,000 worth of shares via cash secured puts in the distance. So let's look at those. We've got 24 puts. This is the deal that Adam's the one that told you about this deal right here.
Yep.
And we started off small. We kind of scaled into it. And then we did a buy right strategy where we bought these shares and we immediately put them for sale at 32. So essentially we created a bit of a spread there. And so as long as it stays in that level, we went on both sides and we would still have our shares, keep putting them up for sale.
So basically the spread is if BidX is below 24 by January 2025, we have to buy 3,000 shares. If it's above 32, we have to sell the 3,000 shares we currently have.
And we wouldn't be obligated to buy those at 24 either. So we would exit the position if it's above 32 bucks.
Right. Exactly.
Completely. But the cool thing about this bad boy is look at that divvy right there, man.
It's a $2,000. So wait, on 3,000 shares, you got $1,800.
Yeah, that's crazy, right?
That is kind of wild, bro. That is.
I mean, dude, that's a lot more than a penny. You know what I'm saying?
Again, before people get super excited, though, the risk here is that
it's big.
Bitcoin tanks and then this thing goes down the drain and the dividend doesn't matter. So
yeah, and then these leveraged ETFs, it's almost like they have a magnet to zero. because they reset like on a daily and whatnot. So yeah, dude, like 4 or 5 days of negative price action on Bitcoin. I mean, this shit could be trading at like 17, 18 bucks.
Yeah, that's the one thing people have to remember. Bitcoin's up right now, which is why it's working. If Bitcoin gets flat or it goes in a downtrend, the dividend really doesn't matter at that point.
But I think that that's where an investment thesis plays a part. When you brought this play to us, you were like, hey, we think that Bitcoin's going to go on the run October. It's the 4-year cycle. So we just looked at all of the data that was in front of us, and we made an educated decision, right? So it was an informed decision whenever we entered into this, and it's kind of playing out picture perfect right now, I would say.
Well, Bitcoin's at 66.2 right now, so it's really working out.
Yeah,
it's really working out. Robinhood 22.97. There you go. It's good we closed out those covered calls right there.
Yeah. Oh, very cool. Yeah. So what do you want to do on Hood? Because now we got squatters, bro. Do you want to?
Let's sell. Well,
the event.
So I mean, I don't want to sell covered calls, to be honest. But I know your philosophy is
that sell last time, and look at all the money we made.
I get it, but now we're getting closer to October. That event, I think it's one of those things we might regret.
Okay, so let me ask you a question. Because this is a good teaching segment. This is where a lot of people leave a lot of money on the table, I feel, with this covered call strategy by not putting shares on. Valuations matter. Do you think that Robinhood can go to $30 right now in any world?
Yeah. 100%.
You do?
100%. Yeah.
Okay. So what does that valuation look like from a price to sales multiple?
28 billion with 5 billion in cash. PE would be closer to 70. But if they're growing at 40%, that's not like 30 is, dude, if Bitcoin goes to 70, 80 grand, that alone, forget all the other shit they've got going on.
Yeah.
The credit card, the summit event. And that's what I'm saying. Robinhood is unique in that the reason it's performed this year and it hasn't been like a Bitcoin miner is because it has a real business. Bitcoin's just this like tailwind. If Bitcoin does what it does, the real business doing what it does, I mean, I think that is, it could be exciting. But we're going up into the event soon, so the covered call premiums will be juicy. It's just my thing is, if it blows through 25, 26, do we really want to deal with that situation, you know?
Yeah.
Or what we could do is sell a 2025 covered call at a price we're happy to sell Robinhood at from our $19 average.
You see, Amit, you're learning, bro, because that's exactly what I was going to suggest.
That's what I thought you would.
Yep. I'm like in $35 for fucking January, and there's the fucking shares and shove them up your ass.
Well, let's see. Let's see the premium.
That's kind of my attitude about the whole thing, you know?
Yeah.
Because I'm not really long Robinhood here because I haven't invested any brain power into this thing. This has just been a trade. It keeps getting better because the company keeps delivering on a bunch of metrics.
That's the thing, and I'm remembering, like, at the end of the day, this is your portfolio. I'm helping you with this trade, but it's still a trade for you, right? It's not something you don't need Robinhood to be like a top 10 position for you. So if we can pick up some money,
if we could get the August the 5th prices, right?
Yeah,
but I was asleep at the wheel on that one at the dentist, so I missed.
That was also my fault. I didn't text you. I was scared that day too. I was like, well, this is a lot of shit happening, you know.
So I mean, this is substantial right here. Like at $32, it's 50 contracts. I mean, is that worth it? You know, that's where it gets kind of interesting.
So realistically, we would be selling our shares not at 32, but at $32.64, basically,
right?
Because we're collecting 64 cents a premium.
And then it becomes a buy, hold, and hope at that point. Or here's probably the best course of action. What do you think? Right now, we don't have the information. What's it called? Legendary? Is that what is this little thing called in Miami?
The Legend Awakens. That's what it's called.
Okay, the Legend Awakens, right? Legends of the Fall, whatever. So what if they announce something amazing and it goes up and to the right? Wouldn't that be an opportune time to sell covered calls with all the information?
I agree. Versus we should wait.
Versus not having information right now.
And it's only 2 weeks away. It's 2 weeks of squatters. It's not a horrible thing, especially if they announce something really important.
So here's the thing. When stocks are going up and to the right, you don't feel any pain for not having covered calls. In fact, you're thankful that you don't have them on because it's one less thing to manage. When stocks are going down and you don't have covered calls, that's when you're real pissed off about it. So you just can't have it both ways. You know what I mean?
Yeah, no, that's fair. That's very fair. And the problem is the premiums on 1016 are not going to be in the high ranges. They're going to be at like that 22, 24, 25 range.
Yeah.
But that is one thing where it could blow past. So that call would be underwater at that point. Yeah, I agree. I think we'll wait 2 weeks, see what the data is, and then we can easily decide if it's worth selling a 3-month out call that's at a higher level.
I like it. Admit, dude, you're going to be better at this than I am.
No, I can never be better than the
I just
GOAT.
want you to be
I can't be better than the GOAT. TJ, you know you're influencing a whole generation of wheelers, dude. Like I see people on your Twitter, they're like, you're the reason they've learned how to wheel.
This is what I know. Admit, I'm a smart dude, but I just look at you from day one and I know that you're just a little smarter than I am. That's just the fucking reality. So whenever people like you, the Chris Patels of the world, the Tanners, these people that God wired just a little bit differently, if you will, the Chris Hager, is that his name?
Yeah.
I mean, is there a smarter dude that comes on YouTube than that fucking guy? I mean, that's like geek squared over there. I'm just saying, when these people really wrap their mind around selling puts, calls, and rolling, and y'all understand all this other data that goes into it, I mean, my God, y'all are going to outperform people like me that are just very general with the knowledge. But what I have that maybe you guys don't have yet is I have a fucking solid ass temperament, bro. Like, I can go to the dragon. Like, I'm the guy that's trying to save the princess, and I'm fighting the fucking dragon at the 4th phase of Mario Brothers. And I'm like, fuck you, dragon. I got this. You know what I mean? So that's the part that I can't teach y'all. But if y'all get that, if y'all have that temperament that I've developed over the years, my God, dude, my results are going to pale in comparison to you guys. And I'm real happy for you guys in advance. Because,
it's
dude,
cool. It's a whole community, dude. Everyone's really crowdsourcing.
It's so awesome how rich you're gonna fucking be, bro. And I feel like I was a small part of it early on. You know what I mean? So don't forget me when you're over there fucking rubbing elbows with punk ass Jim Cramer and bragging his ass about fucking Palantir.
Speaking of Palantir, what's going on with your Palantir? Let's look at
I can't believe we still have these covered calls, bro. It's like the covered call gods are just like making fun of me, and they're like, hee, we're gonna leave these on here until the bitter end, just so that you know that you did wrong. So I have the 23,000 shares, and I've got covered calls at 12, and then I kicked this can down the road, January 2026, 45 and 35, collected about 30 grand, 40 grand on those rolls. Yeah, it's right here, 26, 7. Yeah, but what is that? About 35 grand, give or take. And I got that premium because I wanted to finance rolling these for a debit. These $12 calls for a debit, and I just haven't found the right situation. So,
and no one's exercised those yet, so you still have the shares somehow.
Yeah, and there's not a lot of extrinsic there, whatever that is, right? You subtract the 12 from the 3680.
18. It's 18.
No, it feels like more than that, no?
Am I doing it wrong? 36 minus. Oh, is that 24? 36. Yeah. 36 minus 12 is 24. Yeah.
Yeah, so 2484. So we got about 16 cents of extrinsic value. So somebody doesn't want to sacrifice 16 cents in profit per share to own my shares right now. So,
which is kind of crazy.
Yeah, well, it is what it is. But if there's like a little bit of a pullback to like 32, 33 even, then I might be in a situation where I can salvage these, and I have all of that premium that I collected for rolling the other covered calls, and I might be able to put a 20 handle on these things for 2026.
So you're not buying 500 shares of Palantir every week anymore? You think it's getting too much in the price?
No. I just haven't gotten around to it today. No,
you actually do want to buy 500?
Yeah, we bought them. When's the last time we bought them? It's because we had bought 1,000 that before the that one day that they were going public, or not public, but on the S&P.
Yeah.
So that's the reason that I had a little bit of time. So I got to figure it out. Yeah. So right here, August the 30th, and then September the 6th. And so on September the 6th, I bought them twice.
Yeah.
And then I was dealing with all the covered call action. So I haven't. Yeah.
No, you did it again September 12th. Look down. You did it again September 12th.
I did September 12th?
Yeah, right there.
No, that's when I saw.
No. Look right below it. Right below it.
Okay, yeah. So yeah, I've been steady. So I definitely need to buy 500 more. So where's freaking Palantir?
Yeah, I mean, look, could we pull back to the low 30s? Yeah, but so far the street is.
Bro, my crystal ball and Palantir's in the pawn shop, bro. I don't believe any of that shit. This is a 2030 play right here. So it won't matter to me in my mind. So did I do that right? Is it 18 grand? Is that what it costs for? I guess.
Sure. Well, also, the momentum there has just been exceptional the past 2 weeks, holding these high 30s. So I think that's also helping it a lot at this point.
Yeah, so there we go. So yeah, we increase the strike price. We're at 23.5, and then I'll sell those covered calls later. I'm going to put them over here at. I'm going to match this batch right here because I'm done with Palantir, bro. I'm just buy, holding, and hoping. I'm done. Like trying to monitor like a weekly or monthly covered call on Palantir is just a losing proposition for me, and it takes too much time. Like it takes too much time.
What else do we have besides Palantir in our port? Actually, can we look at SoFi? What are you doing with? Actually, let's look at Intel, dude. We haven't looked at Intel for a while. I think you might end up being a comeback kid of the century with Intel.
So got the shares are at $24. I own them at 27 because I'm real good at picking the bottom. That's my version of the bottom right there. I didn't realize there was a cellar or basement. And then I put the shares up for sale at $25. So I've been wrong everywhere, bro. Like I've been wrong on the entry point. I've been wrong on the covered calls. But this is one that I'm actually happy to be wrong on because if this covered call is under pressure, that means that the shares are recovering. I'll absolutely roll out of this position right here, Amit, but I'm waiting until it breaches 25.14. If it goes to 25.14, I'll immediately roll. I'll look to roll to January and I'll put a 27 or 28 handle on it and I'll sleep easy at night and let Intel do what it's going to do. I've been studying it, dude, about 10, 15 minutes a day. That's a lot for me because I don't like to study stocks like that or companies. But dude, there's a lot of positive catalysts for Intel. And it also tells me, like, if Qualcomm's interested and other companies are interested in Intel, well, then maybe they see something that we don't see.
Right.
Or that I don't know what exactly is going on with Foundry and all of this other shit because it's a little bit above my pay grade. But I don't think Intel is going to zero. So it gives me a little comfort there.
What is your adjusted cost basis on Intel?
Let me look because I have an actual. Yeah, I have an actual. What do you call it? Yeah, it's not that. It's not much better. It's like 2760.
Okay, that's still not horrible at all.
Yeah, so I think we're going to be able to manufacture the win. I don't think it's going to happen right now. I don't think
if it stays below 25 by October, you've collected a ton of covered call premium, and then
that wasn't really that much. I only got $2,800. That's why I'm saying I got the covered call wrong too.
Gotcha.
But still, I've recovered at that point, and then the next round of covered calls theoretically should give me $5,000-6,000, and I'll be good with that. There's also one last round of dividends coming with Intel before that goes away, so that's kind of nice as well.
Yeah.
So the thing is I mean, just so y'all know, full transparency, what am I trying to do? I'm trying to get to break even, and I'm trying to get rid of half of the position. And then I want to ride half of the position, 10,000 shares long and strong. But at that point, I would actually be hoping for a pretty serious dip. And I would like to rebuy those 10,000 shares in the $20 range. And now I've got an average at about $24, and I'd feel real good about that versus having an average closer to $28. So I'm kind of trying to swing trade a portion of the position, if you will. So, but if we get to $28 and I'm not tied up in a covered call, dude, like with the quickness, bro, I will be selling 10,000 of those shares and just kind of regrouping and stuff because I feel like that money could better be allocated somewhere else, if that makes sense.
Yep.
And learn from the mistake. I got caught my hand in the cookie jar. I stayed patient. Hopefully I'll get away with it. If not, well then, you live, you learn, you tell the tale, right?
Yep.
So
okay, can we look at SoFi?
SoFi. I'm just seeing if anything happened here. No, nothing with Riot. Okay, where are we at with SoFi? SoFi woke up on the right side of the truck bed. That's good.
All right, above 8. We're back in the 8s. Not bad.
So I've got the shares over here. So we're finally making a little bit of money on the shares. I got 6 strategies, options, collateral, 800,000. So that's an agreement to buy. It's right here. 100,000 shares of SoFi at $8 on or before January. And then I've got 500 covered calls at 9, and then everything else is leaps. I got 1,000 leaps at 10 for January 2026, 200 leaps at 7, 200 leaps at 5, and then I started building out this position as well because I want to align my goals with Anthony Noto's. So I've got 100 leaps at 15 for June of 2026. So I've got a lot of covered calls that I could sell here, But I've already got it in my notes, dude. I ain't selling covered calls on SoFi unless we get to $9 a share. Then it's covered call season again.
So what covered calls do you have on it right now?
I only have $9. I got 500 contracts.
Oh, the same ones we looked at a while ago.
For January, yeah. But I want more.
Go to this $8 put. This one you think it'll be good, and you won't have to buy these shares.
Yeah, for sure. Yeah, so it's pretty good right now. Halfway home.
Up 50% on it. Yeah.
Yeah. Are y'all ready for the best segment? I've been saving this one because I prepare on like, how can I do this segment better? So let me give y'all the best trade that Amit and I have made so far. Do you know what that is, Amit? You probably don't even know.
I have actually no clue, to be honest.
TSLL.
Oh, yes. This one's done great. Tesla's done amazing.
So we got 10,000 shares at 37. And then I went absolutely ape shit. Look at this thing right here. So there's cash collateral of 847,600. There's 7 open strategies. We got covered calls at 12, 11, and 15 for 10, 11, 10, 11, and 10, 18. So I got to babysit those. But let's talk about these guys right here, Mitt. We've got 600 cash secure puts at 773 for January, 400 cash secure puts at 673 for January. And they've been printing a little bit. Been in these since 829. And we're already at 52%. So there's 43,000 left. You want to walk people through that scoreboard right there?
Yeah. So essentially, our break even is 623, and we're up 47,598, up 52%, expiring 2025. Current price is 1327. And so as long as Tesla keeps doing well, we are going to maintain this momentum and likely be able to not have to buy these shares.
Yeah, but here's the question. The question is to close or not to close, because we've only been in this thing for a little over a month. There's still about 3-4 months left in the contract, right? How many days to expiration? Can anybody help us out in the chat? I could pull it up.
30, 30, 60, basically 85.
I could pull it up this way, because if I go here this way, it's 112 days. 112 days to expiration. So,
is it worth waiting 112 days for 40 grand, basically?
So normally it isn't. And people are like, what do you mean? Because we've already collected 50% in a month. So the math says you should undoubtedly close these.
Well, break that down. Why 50% in a month means the math says you shouldn't wait 4 months for another 50%?
Because you've already captured 50% of the win in 20% of the time. Right? So it's the time value of money. That's a conversation for another day, but there's an actual formula for time value of money. Some of you nerds will pull it up and understand it better than I do. But I have a general concept of the time value of money. So looking at the time value of money here, it doesn't make any sense mathematically to hold on to this trade. However, it is $773 times 600. So can you do the math on that, Amit? How much collateral that is? I can.
Yes, I'll do that right now. 773 times 600. That's $500,000. I mean, it's 463. It's basically $500,000.
Yeah, so it's a shitload of money, right? So now the question becomes, okay, cool.
Okay, so let's close this, and we're doing Robinhood puts for $500,000, baby. That's what we're doing.
So here's the thing. You got to look at, okay, cool. I'm not opposed to that. If moving the money over to Robinhood makes you sleep better at night and you collect more premium than you're giving back here, because I'm also creating a huge taxable event here. If I wait until January, now all of these realized gains on this particular trade, I don't deal with them in 2024. I don't have to deal with them until 2025. This is where there's a game within the game, right?
Yeah.
So do we have anything that we can allocate, whatever that was, right? 400, 500,000, whatever it is, right? 773 times 600, whatever that math checks out to. Can it yield us in the same time frame more than 42,600? And substantially more, because now I have to consider the tax implications. So I'd really be looking for more like 48 to 50,000. Does that trade exist? If it doesn't, and I don't have anywhere else to put the money, I mean, my God, this is easy street money. Why would I want to surrender a $42,000 bill? Maybe I consider it when it's only a $20,000 bill and maybe less than another month has expired in this trade, if that makes sense.
So I'm looking at some trades right now. You basically want to recoup 50 grand with this 400K.
And it's got to be something that's sleep easy, because let's look at the delta. This is a 12 delta, yo. We're talking about 88% chance that we don't have to do shit and this expires worthless.
Well, I found one today. Was not going to. We could sell the $22 put for Robinhood on January 2025 and collect $43,000 of premium, almost exactly the amount we're giving up. However, doing it on today is not the best because Robinhood's up, so the premium we could get maybe 10% more on a down day. Number two, if you're saying this is an 80 delta, maybe we just leave this and we ignore the time value of money. If we think Tesla's going to still do well.
I think the teaching segment here is sometimes doing this right here is the hardest thing to do for a lot of people, myself included, but it's the right thing to do. Because what other trade can you find me that's so sleep easy, especially because we got a huge event coming up on 10/10. So I was thinking kind of like with the whole Robinhood school of thought with the Legends Awaken or whatever the hell, Legendary. Well, why don't we revisit this right before Robotaxi Day?
Right.
And then what if we can milk another 3 or 4 percentage points out of this thing, and then maybe there's a pullback in something that we're just as excited about, and we just kind of spread the risk around.
Yeah, I agree. I think waiting is not bad here, especially after if we run up even more into 10/10. I think waiting is not a horrible situation.
Yeah, because look at these, dude. I mean, these other ones here are pretty exciting too. Look at this guy right here. I mean, dude, is there another sleep easy trade? And we're already up 55%, same time frame, and there's an easy $18,800 bill there, but it is $673 times 400. So it's a pretty substantial amount of capital.
You sold these when Tesla was what, 220? That's when you got into this trade?
We can look at it. It was on 827. So we pull up Tesla. And it was for 827. So I guess we just go here, maybe.
Go to the year to date, yeah. So just go all the way down, October 27th, or not August out. So you sold it at 205. Wow. It's 250 now. So.
And then this is what I got going on with Tesla, dude. I already handled my business over here with Tesla. I rolled those 225 covered calls to 280, and I'm gonna let Tesla go sideways, slightly up for another year. Just mathematically, understanding a little bit about valuations. I get how Tesla technically can go to like 300. I don't see a world where it's going to go to 414 again anytime soon. But dude, it's got to do something to command these multiples over here at 280. I mean, there's a lot of people that can argue that it's extremely overvalued right here, right now. So I put myself in a position. I essentially created a spread, right? And I'm going to exercise these long calls about a month before expiration as well. So I'll legit be sitting on 4,000 shares at a better average. And then I'm just going to manage these covered calls for the next 3 to 5 to 10 years, however long I want to be in Tesla. So it's a very Palantir situation where I'm like trying to let the winner run a little bit, and I'll manage it from behind for the next 3 to 5 years. And hopefully I'll realize a pretty substantial win along the way. So that's Tesla. So what do you think, man? Doing pretty good, right? With the TSLO and whatnot.
No, that was a great play, dude. I remember that day you texted me. I think you just like had a feeling one day that like TSLO is cheap and you just sold a ton of.
I wanted to pick up shares. Remember when it dipped under 6 for a hot minute?
Yeah.
And I wanted to pick up shares, but you hadn't gotten comfortable with share ownership because we were just playing the cash secure put game, right?
Yeah.
And this was only a month or two into this project. Now you do see the value of owning shares at the right prices.
Right.
And, so we're able to see both sides of that. And then the other last thing that I think that we can do is
I think Amazon, we bought 500 shares last week of that, right?
Yeah. And that kind of worked out. I sold covered calls immediately. So now we're sitting on 1,500 shares at a 175 average. And I've got them all over the place, right? This is all for 1018. I've got 500 of them expiring are getting called away potentially at 175, 185, and 195. And I just want to manage these here in a couple of weeks and kick the can down the road probably a month or so and try to increase all of them anywhere from $2 to $5. And eventually, within 6 months, I'm hoping that they'll all have the same expiration and strike price, because that really kills my OCD action right there. But I mean, dude, you have no idea how hard it is for me to just not take losses over here just to match everything up, because I'm like super weird like that. Like I'm the guy that all the water bottles have to be facing the right way in the fridge, and it really freaks me out. So,
Dude, I have OCD as well. It's a different type of OCD, but it's one of those things where you get annoyed sometimes.
This really bothers me right here, Amit. Like, dude, y'all have no idea how much stress this causes me to where everybody's screwed up in different ways. I'm just showing y'all how I'm like real fucked up in the head when it comes to this kind of thing. It bothers me that they don't all have like even 190. I would take 190, like acquiesce a little bit, like give and take a little bit.
It's like even if you'll even lose some money just to make sure that it looks better.
Yeah. So China, can we talk about China a little bit and then do your little word of the day?
Yep.
So this was my China play early on. It's very risky. I don't want people following me into any of this shit or anything, please. But my goodness, how am I looking now? Right?
It's not too bad, man.
But here's the thing. I did put these for sale January of 2026 because valuations for me matter. Now, technical things can happen and all that, it's whatever. But with the understanding that I was going to make some money along the way, obviously these calls are going to print over here. I'll eventually take ownership of those a month before expiration. So it's going to be 120,000 shares when it's all said and done. So keep that in mind. I'll be averaging up a little bit because the shares that I'm agreeing to buy are at $5. That's higher than 468. So I'll probably have about a 480 average on the 120,000 shares, and they'll be for sale at $8. But then I'm also been selling cash secured puts along the way. I actually sold these today. Right. So I'm already up a little bit on those. I've got an agreement to buy 20,000 more shares at $5 in January. And I'm going to keep doing these 200 over and over and over again so that the covered call pain that I might experience down the road, it won't bother me that much. Kind of like Palantir doesn't bother me that much because I made so many premiums along the way.
Right.
And depending on what's going on with Neo, if they have a legit patch profitability, etc., I really don't give a shit if they're trading at 10 or $11 in January of 2026. I may be okay just exiting the entire position because it might be about a $250,000 gain.
Yeah, it's a double, regardless if it's at $20 or not. Like it's a double.
And it's on a very risky asset class.
100%. I mean, if China didn't stimulate, your Neo would not be looking like it's looking right now.
I'm absolutely screwed, right?
No.
So that's the thing. So whenever you are right, when theoretically you should be wrong, you have to be okay taking that win and not just being like, oh, I'm smarter than everybody else. Like just accept the fact that you got a little bit lucky here. Let's call it what it is. You know what I mean? Because I remember making videos. I remember doing these screenshots on X and saying, please don't follow me into this trade. I've done some research. I know a couple of people that actually work at Neo and stuff. And they're like, hey, dude, we're doing this thing. You know what I mean? Like, we're doing this thing. And I'm like, okay. So it's just one of those things. But I mean, my goodness, dude. My goodness. Please lock in wins if these opportunities present themselves, because it's so easy to wake up and I'm down another 100 grand, like an Intel or something, with no path to get the money back. Whereas Intel, we have our government. I feel like that would back them. And then there's other big companies that want a piece of Intel. Right. So it's one of those things, man. It looks good. It feels real good. But I also know that this shit could go sideways very, very quickly for me. And I'm still babysitting this one here. It's getting a little closer though, Mitt. It's getting a little.
Where's Riot right now?
I don't know.
799.
Is it in the money yet or no? Where's Riot?
Let's see. 792.
Okay. So Mitt, let's just do it to where we talked. So you've interviewed Vlad, what, a couple, 2 or 3 times already?
Yeah, about 2 times. Yep.
Okay, cool. I'm hoping to meet Jason at this thing in Irvine that I'm going to, this roundtable deal.
Mhm.
So there's a couple of questions I want to ask this fucking dude, but I want to ask him in a way that it doesn't really piss him off, right? So
Okay.
essentially, this is what I want to know. Y'all have this amazing infrastructure. I've been studying the company since 2020, but for whatever reasons, when y'all put out this report, it says that y'all aren't mining that much Bitcoin in comparison to other smaller outfits.
Talking about Riot, right?
Yeah, Riot
Yeah.
platforms. So why is it that y'all constantly, consistently like do so little with so much as far as infrastructure, amazing balance sheet? When you add their HODL and the cash, it's always about $1 billion. I mean, it's almost like they're the gorilla in the mining space, but yet they underperform. And is it strictly just because of like curtailment credits and all this other shit? I just want to understand like why their machines don't capture those satoshis or whatever the hell they get rewarded for solving these algorithms or whatever.
I mean, dude, this is the best way to do DD. If you get to personally ask the CEO of a company you have 100,000 shares in a question, I mean, you could straight up say, "Hey, I have 100,000 shares in your company. I'm curious about this." You know,
He knows.
Oh, all right, there you go.
Knows. Yeah, he knows. He's liked some of my posts and stuff on X and whatnot, or somebody that manages his account. I don't know. Jason has that kind of time, right?
Right.
But I followed Jason for a long time. He was a professional poker player for 14 years. He played at a very, very, very high level. I mean, very high level, guys. And so I admired his poker prowess, if you will. And then whenever I started studying the miners and I saw that he had become the CEO of Riot, I immediately was enthused because I knew who the CEO was, right?
So how long are you gonna have to spend with them? Like, you get an hour dinner or something like that, or?
No, I don't know. It's just a little roundtable discussion. Bitcoin Mafia or Bitcoin Bella. Somebody on X was like, "Hey, y'all should invite TJ the Wheel Deal." So I just chimed in saying, "Hey, if this is a real thing, I'd love to attend." There's going to be a lot of people there. I think it's not like I'm going to be sitting at a table with these people. I'm sure I'll just be in the audience. But I want to be able to ask questions or work my way. Maybe use my wife because she's real pretty. They won't tell her no. And just I want to, I just want to. I feel like I have the right to ask some hard questions. Or is it okay to put them on the spot like that? Or how do you do it? Were you just real timid, or because I'm very straightforward because I don't give a fuck, right? I got my own money, so it's like I'm not intimidated by Jason.
No, I asked Vlad, "Hey, you guys giving 3% of this credit card? How the hell are you paying for it?" I mean, like these are the questions people care about, you know. And so, yeah, I would ask. I'd be like, "Hey, what's the difference between you and some of the other miners? What happens if Bitcoin goes higher? How do you deal with that?" And if he's really, if he really cares about you guys, he's going to want to answer that as much as he can because he knows you guys are the reason why the company is even here.
Yeah. So here's the other question that I have. This is the one that my wife came up with, because dilution's like the solution for these miners, right? Like they typically are like, "Fuck it, we'll dilute. We don't want to go take on debt because there's a lot of crackheads that are buy our drugs."
Yeah.
So like at what price does Bitcoin have to be so that they essentially are solvent and they can fund their expansion with the Bitcoin that they're mining, etc., and not having to just treat us like ATM machines? Because with oil, operators know that $65 a barrel is kind of like the golden rule right now. It's been for years. Goes below 65, it's kind of no bueno for them. You know what I mean? Stays above 65. Hey, everybody's making money. Everybody's happy. Everything's copacetic. So I've never heard that number thrown out with the Bitcoin miners, because to me, it's the same concept. If you're mining that commodity or whatever you want to call it, you're mining that asset class, and it takes you $30,000 to mine it, 40, whatever the number is. At what price does that Bitcoin, does that commodity have to be so that you're a self-sufficient company? And nobody ever asks those questions, and all these fucking nerds know all of this shit about terahash and joules and all this other fucking bullshit. And they talk about the Lightning Network. They act like they know Satoshi personally. Get the fuck out of here with your bullshit. Why can't anybody just give me a simple metric that I can wrap my simple mind around?
Well, the Bitcoin miners are very interesting, dude. I've talked to a lot of these people in this community, and they are obsessed with this idea that when Bitcoin goes up, the miners will follow, which they're right on. But the problem is it's a real business that has to produce real revenues, that has to do real things like dilution. And you got to deal with those risks when you're part of it. So, but in general, dude, if Bitcoin goes up, it doesn't matter, right? What the price, your magical price you're looking for, if it moons, all of them go to the moon, which I think it makes it as simple as, we need to understand. If it doesn't moon, then it's stuck.
Yeah. So anyway, so those are just, like little questions that I have. But we'll see what happens. If not, it doesn't matter. We're going to go hang out in San Diego.
Do you still have your Bitcoin, or do you sell it?
No, dude, I'm a hodler, bro. What is it called? A sat stacker? Is that what it's called?
Yes, I think that's what it's called.
Because I don't have enough for one Bitcoin that I could justify.
You have like what, 20 grand of Bitcoin, 10 grand or something?
No, dude, I freaking stepped up my game. Yo, this is the Bitcoin bull run. I'm at a 0.40 sat stacker or Satoshi stacker. I don't know what you want to call it.
All right, you're up 2 grand on Bitcoin.
I'm a Bitcoin fragmented owner.
Fractional owner.
Yeah, I want to write these things up to 100 grand. Everybody says 100 grand. Why just want to say out? I don't know why it's worth $66. 6,000, bro. I'm not trying to know anything about this shit, and I feel like there's a lot of people that are very interested in looking and sounding smart. I'm just more interested in being rich.
Yeah.
Because Bitcoin's above my pay grade. I don't really understand it, and I've spent way more hours on this asset class than I care to even admit, and I just don't understand why it's worth money. You know what I'm saying? Like, I mean, as far as like, yeah, I know there's 21 million and there can never be any more and all this stuff. That's all fine and dandy. Why is it worth money though? Like, it's not really backed by anything except the hopes and dreams of what this artwork will be.
And backed by BlackRock. That's why.
Well, now it is. So now it's getting exciting. Now it's getting exciting. We just did a podcast on Wheelers about it. I feel like there's so much big money in Bitcoin. It ain't going anywhere. Like, they figured out how to make money off this thing. And now they're like, hey, this is the easy asset class to be in for us. So, why not have it around? I think it's going up, dude. I have no idea why, bro. This is just you can't call this an investment. I think this is nothing more than speculation. And but I think it's going up and to the right. And I would like to make a little bit of money going from 60 to 100. Call life good.
Well, you are very savvy if you are able to do that. So that's the word of the day. Really simple one: experienced, knowledge, and well-informed. I think most people know about this one, but yeah, what I will say is savvy is the TSLL, because I forgot how much you dumped at 205 into that trade. That one's worked really nicely. Really nicely. And you dumped it really based on the 10. I remember you texted me that day. You're like, hey, I think 10-10 will be big. Let's just get ready for it. There you go.
Yeah, we'll see, man. We'll see. I'm definitely not a Bitcoin maxi, though. I've learned that's new terminology I learned from this guy, Mark LeBlanc. I'm not a Bitcoin maxi, but I'm not a Bitcoin bear. Like, I'm excited about it. I just don't understand it, dude.
Yeah.
Like, I don't really understand like the use case and all that. It was supposed to be very simple, like peer-to-peer finance and decentralized and, this level of anonymity and stuff. But I feel like the story just the legend keeps growing and growing. Like, everybody's sitting around the campfire and they're trying to create this ghost story to scare the kids. And every generation just keeps adding more and more and more to it. In Spanish, we call it crema on the taco. So I don't know. And I know you've studied it here recently. What's your elevator pitch on Bitcoin?
I think most people are buying it because they are afraid of the United States devaluing the dollar. And that's why you're buying it. The whole decentralized, you can do peer-to-peer payments. I don't think anyone cares about that. I don't think Michael Saylor cares about that. I think he cares about, hey, the US is inflating their currency. They're printing so much money. We have 35 trillion in debt. Let me have this theoretical store of value that is finite, that has some use case. You could call it digital gold. That's when the peer-to-peer payment stuff's kind of, you could say, is a use case of it, even if people don't use it. And that idea in and of itself is more powerful than anything else. And now you got BlackRock and Fidelity and all these institutions on your side. And so I think that's really the bull case versus like people actually paying stuff with Bitcoin versus fiat currencies. The funniest thing about this is everyone wants Bitcoin to go up to 100,000 to then sell it for fiat dollars, right?
Yeah.
So it's like, we hate fiat dollars, but we're going to love 100,000 of those fiat dollars if we can sell it,
But I saw an interview where Michael Saylor basically said that everything's essentially going to be Bitcoin and it's somehow going to be backed by the US dollar. So didn't that like create a little hole in the argument as well? I don't know, bro.
I mean, look, he has a long thesis. He just bought $1 billion more of it last week. So that could happen, but I think it would have to get to the point where the U.S. debt becomes unsustainable, you know?
Yeah. I think the real question is, do y'all think the US dollar is going anywhere anytime in our lifetime? I don't think it is.
I would say no.
And everybody knows that they print more and more every day and so on and so forth. But I mean, are people still like, if somebody gives you $1 million, you're going to say no? You know what I mean? Like I just think that there's so much trust behind the U.S. dollar, and it's not we're not on the gold standard anymore. I think it was President Nixon that took us off the gold standard in the 70s. So now it's backed by essentially the military, right? Like the strength of the military. And I think it's just backed by the value that people place on it, right? It's the common day barter system. You know, the Indians used to use, here's my daughter, you know, here's my this, you know, like they used to barter with daughters and stuff, right, to get the stuff they needed for their land. And now it's just like we just use money. I don't know. It's interesting. I gotta run, man. I appreciate each and every one of you guys. I go back and I do watch these. I read the comments. Some of y'all are really, really nice. There's a handful of y'all that are really, really pricky too. But I love all of y'all.
Creator.
But I love all of y'all.
Yeah, please make sure to follow TJ. TJ, have a great weekend with your pops. Hopefully you have a good one and enjoy it. And
yeah, appreciate it, man. Keep doing what you're doing, brother. Keep doing what you're doing. You are my Palantir research. Hell, now you're the research for a lot of these things, dude. I got to put you on payroll when I start the bidding hedge fund.
Also, we got to give a shout out to this guy, 10,000 on Twitter. Dude, last time, I think it was a month ago, you were maybe at 4 or 5. So this is a doubling in a month. Can you speak a little bit on that? How do you feel about this? This is not easy to do.
Yeah, I've just been posting screenshots essentially, but the big thing is just, dude, if I need a trade, bro, let me give a shout out to the Twitter community. I only follow like 400 of these guys and gals, robots, whatever they are. My God, dude, you can find so many legit trades on Twitter, trade ideas.
Yeah.
And then you go look at them. I put them, and I have these amazing software programs courtesy of the hedge fund. And dude, like these people are just good at it, dude. Like some of the best financial minds that I've come across are on the X platform. And
big deal.
And then there's another shout out to, I think he comes on your channel, Paper Gains.
Yep.
Dude, I've never seen cleaner charts, dude. And then there's another kid that I follow. His name's Cole. I think he might be Option Christian, guys.
Yeah, he's awesome. He's great.
I think it's his brother, dude. Dude, this dude has like some very, very clean technical analysis. So there's like some of these people that eventually I want to, become like friends with. I actually reached out to Option Selling with Christian, and we're hoping to link up to go have a lunch or whatever. Because I feel like he's the biggest option seller that I know of, aside from myself. Maybe invest with Henry.
And he has good takes too. Like he talks about
Really
the psychology of it. I like him. He's awesome. He recently went from Fidelity to Robinhood, so he's coming on to Hood as well. So.
Yeah, so I want to just kind of get it. He's definitely not bullish on China, so I'd love to have a quit. He's been calling Neo and all these other companies, shit stocks and whatnot. He has like his list of stocks he would never sell puts on, and he's very opinionated about that, as am I. But he's recently bought some shares on SoFi at like 760. He published. I think he went long.
I think everyone's waiting for them to break out of that 4-year trend of being at 7 or 8, and I think if that happens, that'll be bullish for them. So
so
Hood.
Yeah,
moving.
Good call, Amit. Good call, Amit.
Good call. I'm selling that damn covered call today.
Dude, we so underwater, bro. And that's the thing about waiting for expiration day. I mean, dude,
I forgot we closed our covered calls.
Yeah,
I forgot.
Dude. Oh my God.
Dude, imagine if this is the fun of the options though. If we waited 20 minutes, if we had not done Robinhood first, we had done Palantir first. Like
so screwed.
There we go. We saved ourselves a good couple of grand by doing that quicker. All right. Awesome stuff, TJ. Yeah, appreciate you. We'll see you next week.
Bye-bye.
Bye-bye. Bye. All right, cool. So we got a market that's doing nicely. Robinhood getting some real momentum here at 23.35. I've been buying a decent amount this week, about 100 shares a day for the past couple of days, to be honest, at around 22.50. And I liked it at 22.5. Could it go back to 22.5? I think it's very possible. I think this pump is really happening literally because of Bitcoin. So if Bitcoin right here, 66, goes back to 65, Robinhood's definitely going back to 22, probably 22.40. But the bottom was 22.19 yesterday or 2 days ago. And we haven't really broke through that range because we've been staying above this $22 level, basically where it was at in July before the August 5th stuff. And now Bitcoin's giving it some more momentum right here. So I don't think it's anything specific to Robinhood. It's literally just Bitcoin. That's what's happening. And so as long as it maintains that momentum, hopefully we get a strong close at that $23 range. Rocket Lab back to 10, up 15%, folks. Not bad. Not bad at all. If you've been in Rocket Lab, congrats. If you FOMO'd in at 10:30, you are down 29 cents. But I don't know if this is the price to buy. I mean, stock's up like 40% this month. A little tough to just jump in unless the thing's just going to keep running, unless there's a lot of catalysts, unless the squeeze is just getting started and this thing's heading much higher. Maybe it is, maybe it's not. But now I don't think it's any fundamental due diligence that can get you to buy Rocket Lab. Like, fundamental DD makes sense if you're literally in it for the next 10 years. If you're buying it into the momentum that it's in right now, it's about technicals and it's about if you think it's a short squeeze, not if you think like space has this amazing fundamental thesis and it's TAM and it's neutron. It's like all that stuff was meant to happen a couple dollars ago. All of it's still relevant, but now that the stock is mooned, that stuff is less relevant in the context of the entry price that you're getting, because I feel like it's more about momentum right now. Snowflake at 114, Netflix at 703, Alibaba up another 3% on the day. China, wow, continuing to gain momentum. You got Coinbase 185, that's up 3.55%. MicroStrategy, I would imagine, is up 6% on the day, 176 on MicroStrategy. Not bad at all. AMD is down about 1%. IWM is up. We had good PCE data. NVIDIA is down 2.7. NVIDIA's taken a little bit of a fall. So maybe some of that money is rotating out of NVIDIA into some of these other names, potentially China and crypto over NVIDIA. But NVIDIA is down after having a really good week. SoFi holding above $8, up 3.4% on the day. You got Google at 166. You have SMCI up 4% after falling 12% yesterday. Again, Bitcoin 66,281. Tesla as well, 255, even though it's down from that 260 level yesterday. Doug says my Rocket Lab October $6 covered calls are going to get called away from me at a 50% profit. Maybe you could roll out of those, Doug. If this thing keeps running, it's going to be harder to roll out of them. But I mean, still, 50% profit's not the worst thing in the world, especially when you sold those covered calls when Rocket Lab was in a different situation here. CrowdStrike 283, Enphase 115, Novix 954, Celsius getting a little bit of a bid up about 3.6%. Hood still holding 2330 up 3.88. Rocket Lab up 15, S&P 573. Where's Palantir in the midst of all of this? Palantir is red by about 1%. It has really been stuck between 36.50 and 37.40 for the past basically 4 days. And so I guess we'll see. Maybe it just trades sideways over the next couple of weeks until we get after the election. But Palantir right here at 36.71, Robinhood 23.30, NVIDIA 120, Palantir 36.70, and S&P at 573.4 on the day. Silver's sold some at 997. All right. Not bad. Decent profit. ASTS. Yeah. I mean, look, ASTS might be where Rocket Lab is leaning towards. ASTS is down 7% on the day, but it did have a crazy run. Interesting that ASTS is down and Rocket Lab's up. So maybe you're getting a little bit of momentum here to other stocks in the space territory that haven't had that momentum. And that's what we're seeing. TMDX is up 11%. They got added to the mid-cap index, S&P mid-caps, yesterday. So that's why Transmedics Group is up 11%. I don't know that much about this company, but I do know they've had a really good year and they've crushed it on all their earnings. And so that's why they're up 11%. Year to date, I think they're one of the biggest stocks. TMDX stock year to date. Yeah, 109% year to date. It's been a really good year for this company as well. S&P small cap 600. Okay, so that was the index that got added to. All right. There you go. Robinhood 23.25 right now here, up about 3.6%. Palantir 36.72 up 1.07, and then the S&P 573 on the day. Hood 3.61% at 23.25. Intel 23.98. That one's up a little bit. Amazon, I don't know if Bezos is selling here or something, but it was at 194 this week. Everyone got so excited, and then I guess we had some sellers step in, as has been the case for a while. Tesla right here at 255. Bitcoin still doing we got through 65. It was so hard just to get into the 60s last week. Now we're at 66. Showing some decent momentum. Are you streaming into the close today? No, I'm not. So we're going to end the stream here. I'll be back at 3:45. I think Steve will join me on the close today at 3:45, and we'll keep going from there. We got Robinhood 23.22, Palantir 36.70, and then you got the S&P at 573. So Steve should be joining me a little bit later on the close. We don't have any earnings today, nothing too crazy. And we'll see how we end out the weeks. Now, we still have one more day of September, the 30th on Monday. So on Monday, we will officially have the final month-to-date returns of the of the market for September. And it looks like it might be different from the past couple of years. But not a horrible month. Got a couple weeks left. Then the election. And then we have the end of 2024. And that's going to be pretty much it. Davis says, hey, cutie, guess who is officially transferring to Robinhood? Okay, so Davis decided to finally, hopefully, did you text me? Wow, he's in Robinhood. Davis is in Robinhood. All right, there you go. We made the transition. Got some people going to the hood. There's a lot of people, dude. A lot of people messaging me over the past couple of weeks that they're going to the hood. You have like 4 days left to transfer if you do want to get into Robinhood to get the 1% bonus. But I think that'll help their September deposits. I think that'll help. And hopefully one day they do come to Singapore. Oh, yeah, Carnival is on Monday. All right, so Carnival on Monday. That'll be an important one. And we'll see what happens there. Cutie, did we miss something here? Davis, he likes his gender. So I think that's why he said cutie right there. Amit should wear the carp tee every day. The market likes it. Maybe I was thinking of getting I was thinking if I go to the next AIP con, I got to wear a white shirt and the blue jeans and just go full on carp. That would be fun. All right, folks. I think that's it. They met on Grindr. Yes, exactly. I mean, what would you swing trade for the next 2 months? Honestly, dude, I have no clue. I really have no. I was like, I don't want to say China, but I feel like China is the swing trade given the momentum that it has. I'm not personally doing it because I'm still not on board with the China thesis, but I don't know, dude. It's hard to find a swing trade here because you got to find something that's actually undervalued and that has momentum. And things are, I mean, even something like Rocket Lab, would you swing trade it from $10 to $12? Does it even get to $12 given it's up 50%? I don't know. It's going to be hard to kind of navigate that. I think over the next 5 weeks, if we just stay stable, that's good. Get through the election. And then we keep going forward from there as well. Yeah, maybe for Halloween, we got to dress up as carp. Halloween is it on a weekday? Halloween is on it's on Thursday. All right. So I got to find a good outfit, dude. I got to find a super good outfit. I got to dress up, dude. I want to dress up. I want to dress up really cool. I like Halloween. It's one of my favorite holidays. We got to find out what we dress like. Rocket Lab, only 4 billion market cap, SpaceX 200 billion. So imagine Neutron is built. I think that's the thesis. I think that's the long-term thesis. The question is buying it off this uptrend. Is that the best entry price? Now, granted, if the thesis is it's going to be $50, then probably doesn't matter. But that is one of the things, I guess, to take into consideration as well. All right. That's it for me. Thank you, everybody. I'll be back at 3:45. We'll probably have Steve on the show. And we'll keep talking. Bye, everyone. Have a good one. See you guys in a few hours.